Hey, there he is. Hold up. Sorry,
Like,
Nine. Don't mean to
no,
interrupt.
no, yeah, no worries, man. What's up? What's up? Can you hear me?
Yes, sir, we can. Yes, sir.
What's going on? Everything good?
We're doing fantastic, brother. It's so good to have you on, really. It really is.
You ready for Thanksgiving?
I am, bro. I am. I'm daughter's gonna come over. We're gonna have a feast. It's tough to cook for just like it's tough to cook for a small amount. You know that. So
hmm I'm ready to eat. I don't know about y'all. Anyway, I was listening to you guys, and real quick, the fella just was asking about when they moved to stop the break even and whatnot. Before I say anything, um, I talked about when to move the stop loss in the latter portions of the 2016 2017 private mentorship lectures. And for the life of me, I can't remember exactly where I disclosed how to move the stop loss.
I want to
I know
say
I
it
did
was
it.
nine early on in nine. I want to say because you're projecting price within nine. I can't say for sure, but I want to say, I mean, high probability trading is eight, short term trading is seven, swing trading is six. Like the institutional kind of
If
breadth of
I'm if I'm
information is
not mi-
five.
if I'm not mistaken, I think that's month two. If I'm not mistaken.
It's it. Pippi probably knows, Michael.
Yeah,
I think it's month
I have
two.
so many things. I have three outlines from three books in my mind that's most fresh, and it's competing with what I did in 10 years ago almost now. So it's hard for me to remember exactly where all that stuff was. So I was making it literally on the fly. Like I had no real outline as I was doing it. It's just like I felt led to talk about this based on journals, how I came up, and that's how I kind of pretty much taught it. But I wanted to kind of like let the gentleman know what I think is a real good, simple general rule of thumb for moving stops to break even. If I could have a couple minutes to talk like that.
Oh, absolutely, brother. It's all you.
So, obviously, it's dependent upon what you're looking to trade time frame wise. What's the duration for your trade? Where ultimately you think it's going to go? Where's the terminus, the target, and where you're trying to get in at in deference into where you think the move started? Because you could look at the marketplace and say, "Oh wow, I missed a better entry below for a long that's going to take up this high or relative equal high," or vice versa for someone looking for a short. You may have missed the actual best case scenario for a short, but still use a PD array to get involved with the next portion of that run. So knowing where you're getting in at and where you think it's going to go, that's obviously your specific implied dealing range. So it's left of the move. So from entry to where you're going to go and target, that range needs to be defined in terms of quadrants, where you're at in the lowest quadrant, the midpoint of it, consequent encouragement, and the upper quadrant, and then the final terminus target. In my opinion, and this is how I teach my kids, that way it's not something I'm just pulling out of my ass. It's something that I'm telling them what to do. So it's a real quick, easy way of doing it. As soon as you know where you are entering and where the market's drawing to, where's your target, where's your final exit point, or if you're going to use that as your target and then you leave a runner on after that, whatever that target is, that's a terminus. As soon as the position goes to profit and then it moves 50% of whatever that target is, it's foolish for you to absorb any kind of loss or eat the costs of commissions and fees. So, in other words, let's assume for a moment you think that the range is going to move 100 handles, okay, or 100 pips in deference to the folks that are trading the Forex market. If it moves 50 handles or 50 pips, you need to have your stop loss covering costs. And that way you can completely remove all concern about being right or wrong. You're getting a free look at it. You don't have to worry about it. And here's the thing that you're going to be wrestling with, because I'm sure you're probably thinking, well, what happens if the volatility is kind of high and it comes down and stops me out? That's why I have all these different PD arrays, because I'll use a new 15-second fair value gap to get me in line with the move if I get stopped out. Getting stopped out needs to be something that you don't fear. And really, what are you losing if you get stopped out if you're following this criteria? You're not losing anything, right? I mean, you're getting your commission costs covered. You're getting no absorbed actual loss. So your monetary loss is nothing. You've paid for the ticket to see if it can get to the destination you wanted to get to, but your flight just got canceled. You got grounded. They had to fly back to the airport, and you got to wait for another airplane. It's as simple as that. So when you have this mindset and you adopt this viewpoint on it, it's very liberating, and it removes that fear of missing the move. So in short, know where you think the market's going to go. Where's your target? Where's your terminus? Once it moves 50% of that range and you're in profit, then you move your stop to cover costs. That means real break even, not just simply, well, it's zero because we trade in futures. So that means there's going to be real costs associated with it. It's not high if you're using a good broker, but you want to make sure you cover it a little bit. Sometimes when you hear me talk about it, I'm facetiously talking about covering, pizza. Get pizza covered. In other words, I'm trying to make 20 bucks, 25 bucks, 30 bucks, just to put something in my pocket for my time. But 50% of what you think the range is going to be to target, once that's fulfilled and you see it, once it ticks there one time, it doesn't need to trade above it. Okay, as soon as it touches 50% of the distance or range you think it's going to move to, as soon as that happens, without thought, without concern, without emotion, without any kind of fear of getting stopped out, you cover costs, move the break even, cover the cost for your commissions and fees, and just simply let the trade pan out. If it stops you out, then reassess. Is it still viable? Is it something that just you got caught off guard? Because your experience is going to dictate whether or not you're going to be able to get back in a trade or not. More skilled veteran students of mine have no problem getting back into a move they got stopped out at. And it's not costing you anything. It didn't cost you anything. And regretting whether or not you didn't take a partial, don't even worry about that, because if the trade's still good and you think it's going to go to that terminus target, it's easy to get back into the trade again. And I've done many trades over my career like that where, when I first started adopting this mindset, it completely changed the whole outlook of what I'm trying to do on a day by day basis when I started becoming a very active day trader. Because if you can't overcome that fear of missing out or fear of being wrong, you see how this does both? It cancels out the necessity for being right. It cancels out the fear factor that's associated with being wrong, and it covers the cost. So you're getting a free plane ticket to see if it can take you to that destination of interest. And if it doesn't take you on that airplane, that flight, you're just going to jump on another plane. It's simple as that. There's nothing to fear. And ultimately, if you do it again and you get stopped out and you take a loss, it's okay, because you should have a model that you're not looking at a one-trick pony that only works once in a while. And your back testing should prove to you that it's not a one-trick pony. Hopefully, it's a fair answer.
Thank you, ICT. Thank you.
Keeping the conversation going, keeping it flowing. More questions. Salient question. Aldo Vargas is here. We have Feriano. We got PTFX. We got Dom. We got Focus. We got Nine. Zick said FX. Zick said, I'm just curious, are you still in that short for Bitcoin, bro? Like you got the high. You still in that
Can I
short?
speak, sir?
You can sure speak, bro. I'm asking because you nailed the high. And you did that
Yeah,
through just learning through all the stuff that we do here together, right? So
yeah, that's a great trade because that's literally there, sir. So and this week there is a short trade on monthly view that's printed on the AR projection. So I shorted it from US 30 because the 3 month exhaustion and the month exhaustion was stacked like pretty nicely.
nice,
So
bro.
I,
Nice. I'm really proud of you, man. I'm really proud of you taking the AR concept of ICT, that the average range, which he does talk about in core content month 5, but you've taken that from a high time frame, you've mapped it out, you found the thirds, and you've really, I mean, positioned yourself into seeing the market pretty clearly, right? So I'm proud of you, brother. Good job.
so the actually this all because of you guys. So I'm very very thankful the ICT and the always thankful to you, sir, also. And this is the great space I think for every beginner trader should watch. So that's a great one. So I will give a tip, okay,
Yeah,
to
we
ICT.
like tips, buddy. That's good. We
Yeah.
like it.
So you can use with ICT the market maker model with the AR range. Okay, so you can also divide any range. Average weekly range, monthly range, or daily range. Divide it to three. Okay, and you have some like the 1/3 of the average range. We have some like we have to watch the open price, and we have some like there's like opening ranges and things. So when we are dealing with the average range, you have to watch. I will tell the example as the weekly basis. Okay, so if you are a one shot one kill trader, you can use average range. So you can track the accumulation and the manipulation and distribution using the AR range. So you have to use it like this. Always I think there's an indicator that average daily ranges x Judas meter by 2 degrees.
Yes, 2 degrees has one, and it is literally word for word taken from the core content. I want to say it's month 5, and I
Yeah,
even want to say it's episode 12.
yeah. So that's a good one because you can always stack your probabilities. So if the average range use average range, you can use pivot numbers also. So I will mostly use average ranges because I
Yes, you
think
do. You've done a great job with the average ranges. Hey, we got Lee Desi here, man. He's a great one to get up.
so. Like this is a great week, I think. So and thankful for your all the helps and stuff, and I hope you are doing well, did well in this week. So I'm silencing. Bye bye, guys. So
Hey, thank you for coming up, buddy. I'm really happy. I know other people are going to be happy too, just to hear your thoughts and 2 cents. I got my boy who's taken some pretty big payouts. He's 22, Punjab Sikhi trader, Lee Desi. Desi Trades, what's going on, brother? How you doing? See, you crushing the market. High five, man.
Thank you. I appreciate it. I'm happy to be here. I saw you guys on. And I was like, I had to come on and talk with you guys. I've always listened to your shows, so I was like, let me come on and say a few things. Um, well, first of all, I know ICT's in here. I saw his post. I appreciate his support and everyone in here. You guys have been incredible over the past like 7 days, especially the last 40 hours. It's been pretty surreal. Yeah, $1 million in a month. Got a 930K payout from Apex Trader, and honestly, it's I started learning ICT concepts in 2022. I was already profitable beforehand, so the transition was a little bit easier because I always advocate. Strategy is one thing. I've said this. People might have different beliefs, but strategy is I feel like only 10% of the game. The 90% comes from the mental and being able to control yourself and having that mental sustained drawdown. As you guys might have known, back in August, I blew up around 350,000 from Apex as well, like 14 days away from the big payout. So, and I told myself I would be back, and I didn't expect it to be so quick. Um, but here we are, and it's been a blessing. It's been a crazy experience. Like I have, after I requested a payout, obviously I haven't taken a trainer or anything like that. Just been kind of enjoying it. I talked to my family a bit, and kind of want to. I'm only 22, so this is definitely hopefully this
Congratulations,
can be my
brother.
goal.
Congratulations. It's
Thank you.
kudos,
I
man. I mean,
I appreciate
you
it.
you you're an embodiment of what the teaching has been. I mean, and I think ICT being here, he can speak for himself, but I mean, you're repping the concepts really well, brother. I mean, you really are. So from as part of the community, kudos to you. High five, man. At 22, I mean, I got a daughter who's just a few years younger than you, and just as a father, the thought, the aspiration of someone really really seeing the market the way you're seeing it, and then more importantly, as you're saying and stating, and I'd like you to reiterate that, the mental, the psychological components towards your trades, towards your trade plans.
Yeah, for sure. I think as a trader, the number one thing you got to be is a risk manager. And there's some days where even during this run where I had drawdown, I'm like, dude, I had to fight the urge to press the button, because for me, I always think about the long term process, the one day at a time mindset, and I'm just like, look, I shouldn't be able to make or break my trading day in one day. It's a compound over time. And obviously, this happened a little quick over the 25-day stretch before they pulled the plug on me for the payout, but it was just still compounding. Like I said, the price action was good. Everything aligned with my trading system and my style, and I just had to put the risk on.
Are
That's
you
really it.
so? If you had to describe how you engage with price, you're an IFEG trader, right? Is that fair to say?
Yes, yeah. That's my entry model is off of inversion fair
And,
value gaps.
and would you like to elaborate a little further? How, I mean, so an MMXM is a big deal for you, right? So you're a
Yes,
market maker, buy or sell model, and you're really looking at that turtle soup entry, and then you're looking to the left, and you're looking for, if it's a buy model, you're looking for that inversion off the SIBIs that brought price down. Is that fair to say?
yeah. So something that I've done this last week and a half is, obviously we're in a market maker sell model, right? Very clear sell side below. I would look for a manipulation into a higher time frame fair value gap or an order block. I know we had a daily fair value gap that got tapped into. I go in on, so what I do is I look for those retracements on the higher time frame. Then I go down to the 5 or 15 minute, and I wait for a 5 or 15 minute. In this case, I was looking for downside, so I'd wait for a bullish fair value gap to get violated. And as soon as it does, once it taps the higher time frame PDA rate, that's where I get my entry, and I keep my stops above the highs and run a 3 to 1, 2 to 1. A lot of my trades ended up being 5, 6 hour trades because of how volatile we actually were.
I love that. I mean, if you're taking bearish trades, it's taking that original bullish impulse and then beyond, right? Like you saw that in the fractal just continually. I mean, bears got paid well this week. They really did. I mean, the shorts paid well.
Definitely, definitely. And like I said, I appreciate all the support from everyone. I appreciate you bringing me up, Kit. I know me and you DM'd a couple times, and you're always supporting me. So personally, I just want to thank you in front of everyone as well for being that support.
Can you hear me?
We can, buddy. Here's one of your monsters.
I just got two questions real quick. Number one, um, did you get to this goal a lot sooner than you thought it was going to take you? And what does your immediate family feel about your accomplishment?
So to answer question one, absolutely. I hit my first 7 figures in April, and now here I am, almost 3x that few months later, right? In a whole month, I made 7 figures. So it definitely is exponential growth in this trading game, because I feel like once you master the mental side of things, it's unlimited growth. And to answer your second question, I called my dad, I called my mom, and honestly, I was tearing up. I'm like, look, this is what happened, and they're like, my parents do well, but they haven't seen this type of money. So it's definitely a proud moment for them. They weren't obviously happy when I dropped out of school a couple years, and we had a lot of clashing. But to see it pay forward and prove myself right, and also them feeling the confidence in their kid to move on in life in terms of this is my full career. I recently just moved out, so it's been kind of hard on them for me not being there no more. So it was a really good moment.
That is awesome. If you could give a little bit of personal perspective as another millionaire, trader now, what would you say to people that are just starting out? They see all the complications of looking at these charts. They look like hieroglyphics the first time you do it. What kind of encouragement would you give them? Because now you have tasted this level of success. Now, it resonates better when someone sees another peer that went through the same thing they're about to endeavor. What was it like for you to find encouragement, and how would you encourage someone else that's starting out?
The number one thing I always tell people who are starting off is do not put a timetable on anything. It might take longer than you expect. It might take way shorter than you expect, right? And I think putting a time pressure on yourself is not the way to go about this. I know people who made their first million 8 years into trading. I know people who made their first million 2 years into trading. Everyone's on their unique path with the timing. As long as you are showing up every single day and practicing proper risk management, you are actually trading. You showing up on the screens 12 hours a day isn't going to do shit. Excuse my language. If you're out there just BSing around, full leverage, max size, and things like that, if you're actually taking the time and understanding what you're doing and having a mental control of yourself, there is no cap to this game. And do not compare, anyone listening to this, do not compare me to yourself, or compare someone else like who else is taking $2 million payouts. Don't compare Lanto to me, or who, to yourself. Everyone's on their own path. Everyone has their own family circumstances, life circumstances, everything. There's so many different variables that we're all different in, right? Why are we one thing I would say though, clap for others until it's your time. There's no reason for someone to start hating on someone just because they're doing well. Clap for others, and I promise you they'll clap 10 times louder for you when you cross that finish line. And like I said, that finish line might be crossed in a year, 2 years, 3 years. As long as you are showing up, I promise you, if you give 110% effort, it is impossible to fail in this.
Boom. Pippy B, you had your hand up?
Yeah, I got a question. First thing, congratulations, right?
Thank
Like
you.
being so young doing this, right? This is life changing. So first or foremost, excuse me, congratulations, right? Now, are you okay answering questions?
Yeah, of course. I'm an open book. Go ahead.
Okay, all right. So my first question is, in regards to the Apex rules, right? Where they say you need 3 months, 90 days to withdraw the whole entire payout of the account, right? Can you walk us through like how you were able to do that in 24 days?
Yeah, I got
Because
you.
I
For
see
sure.
how they did change a rule, right? Or I don't know. I mean, I've been trading with Apex for a while, and I know they sneak little things in there here and there, right? So I'm just curious about, how you did that actually.
Yeah, so I'll give you my full entire Apex breakdown, right? And I'm gonna start with the trading side of things, guys. There's trailing drawdown. I traded 50K accounts. I turned them into 116K. You have to size down in the initial 10 days. I was sizing 3 to 5 micros until I had 8 to 10K buffer, and that's when I started sizing up. You need to let the buffer build before you size up. Keep that in mind. Second of all, for Apex, if you run a high balance, such as usually it's like 700K plus, once you get that balance, they'll start monitoring you very closely and pull the plug on you early. Because one of my other buddies too, KJ Futures, he recently pulled out 700K, and he had the same thing. He had 20 accounts, 35K each. He got paid out because they're running the risk. If Man, holy shit, no ego, but if they let me trade these last 3 days, it would have been over for them. I would have broke the record. I promise you that I would have broke the record. I'm not greedy about it. I'm happy with my 900K, but as a company, I would ban myself too. And that's one way you can get your full payout before the certain amount of days you need, is if you run a high balance and you have a good consistency during that time, which luckily I had.
Copy. So technically, if you keep that consistency going with the high balance, as long as you keep that momentum going, you'll be able to withdraw after the third payout. Correct? Did I read those rules correct?
It's not after the third payout. It could be after the second one. It could be after the fourth one. There is no actual in writing. For me, it just happened to
Ah,
be after. And also, I had my first payout accepted. My second one got denied because I broke a rule. The third one, when I was going to request my 28K, that's when they emailed me. They're like, no, you're not going to request that. You can take the whole thing and you're off the firm, essentially. Which like I said, I'm happy they gave me the opportunity to take the account. They offered me a live account too. I did not entertain it because I can fund my own money on a live account. So for me, it was a no brainer to take the cash.
I love the inner workings. I love this.
I love it. I love it because there's a lot of confusion out there, with that. you know? And when I saw that at first, I was like, honestly, I thought it was cap, right? But then, once I started, I have accountability partners and we talk about things like this. And he's like, yo, honestly, pay attention to this. And, we were reading something and I was like, wow, like I don't know, I must have skipped over that part, right? So that's very interesting, and it should be a goal for people that trade Apex, right? As long as you keep that consistency going, it doesn't matter about the account balance, right? So when people get windfall victories, which I have got plenty of times, right? When you catch these windfall victories and now it pushes you back a little bit, as long as you keep that momentum going. So just like how he said when he first started, when he came on here, he was saying about his mental, right? Coming into the game with a clear head every day. Don't come in with an ego like, I'm the best trader in the world. I'm about to, run this up to 50 million, right? Because they're not going to allow you to run it up to 50 million. Okay? So we have to maintain that ego to have that consistency rolling. So I'm very glad that you came up and I'm very glad that you were open to speak about that. So there should be no more confusion going forward. As long as you keep that consistency going, you'll be able to get a payout, period.
Can I
So,
ask one more question real quick? I'm going to have to escape after this.
of course, go ahead.
Jump in, boss.
When when you saw that you had reached the target of no more allowance for you to be able to trade, I mean, obviously, I mean, at the risk of sounding arrogant and egotistical, whatever, which I'm not trying to stoke that, okay? It has to feel really good for them to be shutting you down because that's a compliment. They're like saying, listen, listen, you can't come in here anymore. You're a card counter. You're not allowed in the casino anymore. What did that do for you going forward? I mean, obviously you're going to be inundated with people that's going to say things like, you know, are you an affiliate? Did they grease your palm? What you didn't really do this type thing. How do you now, as someone that's highly profitable, how are you going to walk forward when you're encountering people that have that doubt? Like, how will you carry yourself?
I would say I've been on the social media side for a long time now on the Twitter space, and if I ever listened to the doubters ICT, I don't think I would be where I was today, or where I am today. That's just my simple process. If you're talking bullshit to me, I'm not listening. If you're supporting me, guess what? I'll support you 10 times back. As simple as that. The saying "a hater never done better than you" is true, right? And for me, even with the Apex getting the payout, there's a lot of haters. This, that. Look, in a couple days, I'm about to get a wire sent to me for $930,000 at the end of the day, and they're not. And I don't want to sound egotistical or anything, but this is for everyone. You got to protect your energy. You got to keep your peace. You can't let the outside people influence what you're doing, because at the end of the day, when you get into your office, are they trading with you? No, you are trading for yourself. No one's gonna, and this is one of those games. No one's gonna come save you. You gotta save yourself. And God forbid I listen to any of the haters when I'm playing one of the most lonesome and self-reliant games. Right? Why would I listen to this? This is not a team sport. This is me going into the office, me winning the day, leaving the office, showing up the next day. I gotta win again. And guess what? If I lose, as long as I learn, guess what? That's another win. I'm 3-0 now. One more, that's a season sweep. That's a series sweep, right? And that's what the mindset I had. And I've been having this mindset for a very long time. And it's just something like, yeah, I see it, and sometimes I do feel some type of way, but there's no way I'm going to act on it or have an impulsive reaction to it. Absolutely not. And especially when there's 100 supporters for every 10 doubters, right? And especially when you guys are the ones supporting. Like, come on now. There's no way I can let the doubters do anything to me when I have ICT tweeting about me, right? Things like that.
I love that. Hey, one more thing. Give me your processes getting 1% better each and every day. What are you doing?
For me, when I tweet this a lot, I like get 1% better. And for me, 1% better isn't ending the trading day green or red. It's about how you manage the day and how controlled you were throughout the day. And I'm talking about overall in life, not just trading, right? Trading's at the end of the day, it's still a very small part of my life. I'm more than a trader. I do other things, right? How well can I control myself in every aspect of my life? If you're religious, are you staying up to your faith? If you're not, whatever you do on the side, are you keeping up to your own standards? As long as I'm keeping up to my own standards and continuing to impress myself, that's what I think 1% better is. Never ever have I associated winning and losing with what the market gave me. Never. It's about the process itself. And if I follow my rules and if I take 35 losses in a row and I blow my account, guess what? If I followed my rules, I stayed consistent, I practiced good risk management, hey, guess what? It was an unlucky 35 trades then, right? So there's never, when I associate green or red with getting 1% better, it's always the mental side of things. And look, I still am trying to figure out the mental side of things for other things in life, right? That I would like to be more consistent and disciplined in. I wish I could take my trading discipline and put it into other sides. I'm not perfect at all by any means. Um, but it's just for me, the mental is so powerful. Like your brain is such a powerful tool, and I'm just trying to master it to the best of my ability, and that'll help people around me too. That's another thing. I want to make sure the people around me are good, and then I'll eat whatever's left.
I love that.
Just want to say, man, well said. I'm proud of you, and I'm hopefully going to be able to see you keep going higher.
Thank you, ICT. Appreciate what you do for the community as well. It's incredible.
It's a love fest, boys and girls. Trader Roundup. Ledesi coming in, just swinging it a little bit, and with reason, my man. Kudos to you. That's not easy what you did, man. It's not easy. I don't care who you are. So, props. It ain't easy putting up that kind of weight. I don't care who you are. So, in a room full of traders, the hat is off, my friend. Well done, well deserved, and good work. Very I guess proud is not a real good word to say, but it's an honor. I'll say that. It's an honor. All right. So anyway,
I appreciate it. Thank you. And I'm gonna hop on out of here. I gotta make some food and stuff, and I hope you guys have a good rest of your day and have a fantastic weekend. Appreciate you guys.
rock on, brother. Rock on. It's 6:30. I like the time. Nine's got his hand up. Want to hear from him. We got Mauricio here. We got Black and Blue here as well. So Arcane's got his hand up. Raising your hand, greatly appreciate it. We're going to go in order. Black and Blue, Nine, Arcane. What's up?
Hey, Kit, what's going on? I appreciate you having me. Shout out to Desi for sure. Very inspirational, what him and Lanto have been doing. What's up, Pippi? And of course, shout out to the greatest coach ever, ICT. We were talking about the average daily ranges a few moments before Desi came in, and I'm sorry to backtrack, but you guys know, like, that is my thing. My particular core content favorite, if you will, core content month 12. And so I just want to ask, if I may, ICT, I have taken that ideology, of course, by my own liberty, not anything that you've taught, but I've applied that to the quarter. So I will do a 5 average quarterly range and then a 5 average monthly range. And I'm also marking the 50% point between, say the quarterly or monthly open and the average, weekly high or average monthly high. And the same thing for the discount side. And what that allowed me to do this week was to, have a bearish bias and know that 24 145 was the number I called out in my tweet. But I wanted to know what your thoughts were on me doing that. And those levels have been so pertinent and so useful to me. And of course, the as you taught it, the 5-day average daily range and core content month 12. And what I'm having trouble doing is using the macros in conjunction with the PD arrays that form around those levels, I'm seeming to, always get stopped out, looking for that lower high of the day between 3:30 and 5. It seems that the New York Open always kills that position that I seem to get into using that ideology. So I would be grateful if you could just touch base on that just a little bit.
Well, the details that you're collecting when you do it, that should be enough for you to determine whether or not it's fruitful or not. If you're, and I'm not certain I understood exactly what you were saying because I had one earphone on and the other one listening to my wife. So I got to make it look like I'm interested in what she's saying because she's talking to me about spending more money at Christmas time. So if you're measuring, if you're measuring like the ranges in from a quarter, like a quarters range, what it's done in the past quarter, I think that's, is that what you said? Because if it's not, correct me, please.
Yes, sir. So, as you taught in Core Content Month 12, you take the previous 5 days, you take that average, and you're able to project the average daily range high, the average daily range low, and then the Fibonacci extensions thereof. So I've taken that ideology and applied it to a weekly time frame, and then a monthly time frame, and then a quarterly time frame. So I'm taking 5 months and doing an average and applying that to the monthly open to get a average quarterly high or average quarterly low.
Okay, I follow what you're saying now.
Yes, sir.
Well, if you apply it to 3 months, then you have a uniform time reference that the market's going to appreciate better. Having it simply because it's a 5 day average. The reason why it's 5 day average daily range or the average over the last 5 days is because our week is basically, assuming there's no holiday, it's Monday through Friday. So that's 5 days. We don't really attribute all that much weight to Sundays, even though they're influential. Obviously, new day, new week open and gap, that such. But having a 5 day period or 5 period reference for weeks and months. I think if you do the weekly, just do it on 4 weeks. Because what is that essentially? It's essentially a month. If you do it over 12 weeks, that'll give you a good round number for a quarterly influence using what you're trying to do with the same thing as a 5 day average daily range and projecting that to give you a supposed threshold of importance. I don't personally subscribe to anything beyond that scope because I have other tools that do better and give me better details than what would be trying to ascertain from using this methodology. But if you're seeing some rhyme or reason to doing it, don't let me say like last time we did a discussion like this, and I was in Kit's podcast here. I didn't want to discourage Pippi, because he was investigating things too. I have to be honest when I'm asked if I see value in that or if I would do it. I'm not swayed in having any pursuit in doing it myself, but I'm not negating or trying to disparage you if you're seeing fruit from it. Because what you internalize in price action, just like a model, just like the PD arrays, whatever one you as the student subscribe to, that's the one that's going to be advantageous for you. It means something to you. So it helps you have clarity, what you're looking for. So if these measurements, if these things that you're trying to do build up your confidence around something, then that's a plus. You're going to get the information from the actual utilization of the information you're gleaning from doing it. It matters not really if I subscribe to the idea or if I like the idea. Just like Larry Williams, he has 100 different things out there that I don't believe any reason why that should be attributed to my buying and selling. But he has faith in it. He has experience using it, and he's made millions of dollars trusting it because it's helped him manage his emotions, his psychology, and what he's looking for in the marketplace. So I think it's essentially what you should be viewing it too. Just because you hold a certain level of regard for me, that's fine. But what works in your hands, regardless of who likes it or doesn't like it. Does that sound fair?
Yes, sir. So it's I just want to say thank you because I know I'm like, you might see some of my comments defending you, and I know you tell us not to do that, but uh, even though I've yet to prove the value that your teachings have given to me, I've yet to have something of substance to prove that. It doesn't take away from the fact that I know that what I've learned from you over the past 3.5 years is absolutely invaluable, and I'm honored to be able to, for at least once in my life, converse with you a small bit and say thank you. I'm very honored. Thank you so much, bro.
You're
Black
welcome,
and
brother.
blue with the bro term. I mean, ICT, you gotta love when folks just affectionately refer to you as bro. I mean,
I'm
you,
sorry.
you
I'm
want
from New
to.
York City. I'm sorry.
Well, no, but I mean, it's a really big deal. Like he want you. I mean, wanting to feel like just a regular person, and then getting bros and dude and things like that. I mean, I know that would feel good to me, and
Yeah,
it's
I
just kind
prefer
of
it over the sir stuff, like
yeah,
the sir.
yeah.
I don't. It sounds wooden. It sounds stilted. I don't like that. I mean, I'm. If you were talking to me and you kept calling me sir, I'd correct you. I'd be like, look, man, just like talk to me. I'm a person. That's all. Just talk to me like we've known each other for a long time. And I appreciate that. I resonate with people that talk like that.
I love it. I just love this platform. I'm grinning ear to ear because it's like I feel like it's been I don't know, like this is I feel like it's just filling a lot of cups. A lot of people like what we're doing here, and that interaction, it's just beautiful. Like I'm just smiling ear to ear, and I know Black and Blue is just like he's just over the moon at the opportunity of just being here and having a conversation. So I know, and I don't mean that in any weird way. It's just kind of cool. It's kind of cool. Um, anyway, keeping it going. Persian turtle, TP03, Persian turtle.
Now I think we had nine
Oh,
next.
my
I
bad,
think
my
nine was
bad,
up
my bad.
next.
Thank you, thank you, thank you. Nine, my bad. You're up next. And Feriano, my bad.
Hey, how's it going, everyone? No worries. I'm actually sitting outside of church. I'm eagerly waiting to get confessed at 4 o'clock my time. So I don't know if I have much time to speak on, but I just want to say I appreciate everyone here in this space. Of course, I appreciate ICT for all his teachings and just the impact he had on the world. Um, just overall, a great guy. So I appreciate everything in that general prospect. But I don't know if you guys want me to speak on anything specifically.
Well,
However, I just
if you
wanted to
had if
chime
you
in
had a
here real quick.
question, or maybe you could talk about how the concepts really resonate with you, or I mean, just
Sure.
the floor is yours, brother. It's whatever.
Yeah, so there are some specific things that ICT mentioned that I specifically paid attention to, where he mentioned build your own specific model that you align with and specific PD arrays. So that's what I basically focused on. It's what, thanks to him, brought me, impacted a lot more of my success. I know beforehand, like a few years ago, I was actually trading harmonics and I was still a little bit profitable, but not to the extent that it is now, right? Now it's just got like 10x at this point because you have specific measurements, specific things to look at. So really just props to those concepts. Now, what I specifically look at is just liquidity pools, time based or just regular old swing highs and lows, and then fair value gaps along with that. Specifically, the interaction with fair value gaps, the quadrants, how it's interacting, how if it's closing above or past the entire fair value gap, in which case it becomes an inversion. I basically use two models for price entries, and that's what I mainly focus on. It's more of a momentum and or reversal opportunity. Both coincide with each other, so that's my main focus, really.
I mean, Nine has some really, for the record, within the community, Nine has some really deep dives within time, and he has, I mean, he's written a book on it, and he utilizes these root candles, and he's got his own way in which he's utilizing these time-based arrays, and he's written extensively about it, so he's not really pulling it out of anywhere but his own study, and it is
What's the
actually
book?
quite fascinating. Not Nine, talk to him about it, bro.
What's the title of your book?
Yeah, so Yeah, there was a few years ago. I got really enveloped into the idea of time. I started looking more from a data approach and in regards to the actual volatility within the markets. I know each instrument has different volatility measurements, and that's where the book originated from.
Do you still have it
It's
on your
definitely a
WAP?
different
Is it
way.
on your link? I'm just curious. Sorry, I don't mean to interrupt.
Yeah, there's probably I made it free for a long time. I could probably do it again, but like it's just everywhere at this point.
Oh yeah, no,
And there's
I have
also a
your
lot of
free book.
other. Yeah, for sure. So I just spent a lot of time on it. I wanted to give it out to the public, just some studies that I made. Definitely help with my training, that's for sure. Just solidifying the
And you
concepts
you
and
focus on the
applying.
1 minute, right? I mean, Michael, I think you would really like it if you make it available. We'll work on trying to distribute it or disseminate it. He calls it DTT, which is digital time theory, right? And it's really focused on the 1 minute. And you have these root candles, and you're looking at average range models. There's different time based models. It's very unique, and it is of his own study, but it is based on premise and things that you have taught, Michael. And just as an observer of someone within the community of someone watching a profitable trader, of your concepts and how he's made them his own, it's fascinating. It really is. I think he's done a really neat job of making these models his own within time in his own studies. And again, he's giving homage to you, and it's unique. So
I'd love to see it.
Awesome. Yeah, I realize it's really unique. I'm just seeing it from a humble point of view. I know it's like a specific cup of tea, right? But it really is what brought me what I have now, right? So it again originated from you. So just want to publicly say that. But it is really unique, and I know it's specific to like time-based concepts and opening prices, volatility, things of that nature. So if anyone wants to give it a read, I'll definitely push it out
yeah,
again.
yeah, do that, brother.
I
Do
like
do
putting it
that.
out for
It's a good
sure. Yeah.
read. It's a good read. He does utilize some time fibs. The way in which you utilize the settings also very unique. Not something I've seen within other studies, even of my own. So it's fascinating. And nine, making that available, I think some folks will enjoy the read. I mean, I have, and the way you trade a 1 minute chart, it's lovely. I mean, kudos. You've got a codified system that you utilize, that you trade with, and you do it live. So I think you meet all of the criterion in which again, like the respect and appreciation for what you do is there. So and I love that Michael's inquiring and would like to see more in depth of your own study. So awesome.
Yeah. Thanks be to God, first of all. And if you guys give me more time, I would like to make like an updated version because, I made that I think a few years ago now at this point.
Yeah, bro,
So
do you? And
there's
when you
probably
make it
some.
available, like
Yeah,
holler, and we'll kind of try and push it out there, and we'll talk about it. I mean, Trader Roundup's a good kind of like touch base. Maybe come back next Friday and throw it in the comments or something.
for
Some
sure.
folks can take a look at it, follow up. So
Yeah, there's a lot of things I could probably brush up on inside the book and grammar specific to that, or just make things a bit more clear and detailed and filter
It's
some things
it's
out.
it's all
So
it's very well done,
um,
I will say. I mean, you actually inspired me. I mean, I ended up writing a book on a lot of my concepts because of that book that you put. Yeah,
really,
yeah,
wow,
I did. Um,
that's super cool.
it
Yeah,
it is very
send me a
cool,
copy if
and
you
I
can
mean,
too.
I mean, my book is called A Market Symphony, so it's really resonating with time and how pivots kind of resonate in the market. So it's its own interesting
I like
concept.
that.
And again, I'd actually like to share that with Michael. So I'll probably email that maybe. But that's not really something. Hey, trade around up a book, but it's just out there. But it's cool. I mean, you
Yeah,
put it out there. So mine, it doesn't. I don't really know if I'm comfortable putting it out there, but I would definitely share it with Michael. I'd love his ability to see at least how I articulate some of these models. Right.
Let's see it.
I love it. Yes.
awesome.
He's like,
Yeah,
send it
awesome. I mean, just
over.
let me know how I can share it. I'll definitely share it, make an updated version, and yeah, I just like providing free stuff to people, like
You do a
tools,
great job of that,
concepts,
brother. You
ideas.
do a great job of that.
Um, Yeah, because I know how this trading journey is. I just want to help out as many people as possible. And I'll do it all for the glory of God. So I just want to put that out there. But I do have to attend to confession within 10 minutes from now. So I do have to go, but it was definitely a blessing being here.
Much
So,
love and respect, buddy.
Kudos to everyone. And
we got
catch you guys later.
We got Ferriano here. He was up next. Mauricio's got his hand up. So I don't know if Mauricio, if it's salient. Yeah. Jump in here, Ferriano. Jump in, buddy.
How you guys doing?
Fantastic. Now Ferriano is a macro trader, trades with the macros. You want to talk at all a little bit about how you trade, or do you have anything you'd like to address with Michael here at all, Ferriano?
Man, it's quite amazing having him on the dial today. I just want to let you guys know, let him know specifically one specific. Obviously, you guys know I'm in love with macro. I'm every macro for the last 3-4 years, and probably won't cheat on her anytime soon. But obviously, I have 3 main entry model, and one of my entry model is like early breaker retest. I have the macro for the main trading hours, 9:30 to 12:30. And then the MMXM, like a very unique MMXM. But one concept that definitely played a major role, I would say, in me finding some level of consistency over the last few years. And I mean, I've done well for myself now, being able to trade and stuff like that. Definitely, I would say is thinking about. Actually, I would say my best entry model is probably like the early breaker retest. So, man, like as of late, I'm going on to this tangent where I'm like diving into this world of like between 7:30 and 9:30. I'm noticing something quite interesting, and I'm starting to expand because I trade right now like NQ, YM, and CL, which is oil. But I'm starting to expand because I'm starting to notice that 7:30 to 9:30 window is quite a powerful window, and I'm utilizing SMT a lot more often.
Sounds like a 2024 model.
Yeah, definitely. I'm starting to utilize SMT, session SMT specifically. So I'm looking for 8 p.m. to 2 a.m. Asia session window, and then 3 a.m. to 6 a.m. London session. So I'm measuring those sessions specifically, and I'm also measuring the 7 a.m. to 9:30.
Okay, wait. So
window.
8 p.m. to 2 a.m. That's a 6-hour range, and then 3 a.m. to what?
To 6 a.m.
To 6 a.m. So that's a 3-hour range. Okay, so you've adopted a 6-hour and a 3-hour range within your model.
Yeah, so that's for Asia, London, and then that's New York is 7:30 to 9:30. So what I'm looking for across all 3 of those windows is for some sort of SMTs, right? And those SMT will give me my bias for like an early breaker retest. So 7:30 to 9:30, if you see an early breaker form, right, after you obviously have a confirmed SMTs at a low, so with correlating assets. So for example, like NQ and YM will be my correlating asset if I'm trading NQ.
Wait, YM is your correlation?
For that specific, because I tried ES over multiple years, and YM would be the better asset that actually give me better correlation for that window.
Interesting.
Yeah, gold and silver, 6E and 6B if you're trading future, Euro USD, GBP USD if you're trading Forex. And then RB, which I think is rubber oil, and then CL, which is crude oil. Those 2 are very correlating as well. And then the last one, if I'm not mistaken, I'm always forgetting the last one. I have about 4 pairs that are correlating, so essentially 8 assets that I'm looking at.
A good one is that ICT talks about is the S&P Goldman Sachs Commodity Index.
Oh,
just gonna add that SPGC GSCCI. That is episode 12, Core Content Month 5.
Can you repeat that? I'm actually on my notes. You said
S&P Goldman Sachs Commodity Index. So it's SPGSCI.
CI. And what's the other one?
Very good for oil. Very good for oil. No, that's it. It's one single asset that you would look at within SMT, within the commodities. And again, ICT, I'm just echoing something that he's already taught.
Got you. And then what would you say would be the best correlating asset with that? If you're looking for some correlation of
I
S&P
like
for early.
oil. I mean, I like oil more than your RB gasoline futures. I personally like oil a lot with the SBGSCI personally.
Oh, okay. I see.
It's
So you're
very,
mentioning it
very,
for oil.
very, very good. And I'm not a big SMT guy, but that's arguably, I would say, one of the better correlations as taught.
I'm gonna definitely experiment with that and see what type of result that I get. But I have noticed that if you want to catch like an early, because a lot of the instrument that have a lot of volatility can sometimes deliver early reversal or early continuation between 7:30 and 9:30. If you can catch an early unicorn breaker, that can essentially form and confirm within that window. So all that you will look for will be a retest of the inversion associated with the last leg of manipulation within that breaker. So once that breaker is confirmed between 7:30 and 9:30, essentially the retest window that I'll utilize will be 9:31 to 9:41, and then 9:49 to 10:17. So my early breaker retest window, those are the retest window that I utilize, and I utilize the correlating asset to be able to have a bias. So for example, gold and silver. So if I have an SMT at the lows of my session, then I'll essentially have a bullish bias for that day. So from that point on, I'll look for gold and silver for unicorn breaker form and confirm between 7:30 and 9:30, and I'll look for the retest of the inversion of those breaker, and then within those retest window that I have given, and expanding my mind because I was only doing this at first with NQ and WIME, and over the last 3 weeks I started expanding that and then going across different instruments.
Yeah,
You
this
know, and
is new. This is new. I mean, you've broken down some parameters a lot more stringent in regards to IFEGs and macros, if I recall. So this
yeah,
SMT thing that you're doing seems to be, I mean, you're finding obviously success with it, but it seems to be newer within your model. Yeah.
yeah, because I was trading an early breaker with test prior, but it was associated with a target. um, it had a requirement of a target. Like I think you heard me talk about major psychological level prior in some of my previous description
Yes.
of my model. So
You like the big figures. You like the big
yeah,
figure, the 8 and 20,
yeah, the
the 80-20. Sorry.
40,000, yeah, the 20,000, 20,100. So a level that ends with 2 zeros or 3 zeros. I used to actually like to see price fail to grab that before returning to the test. But I'm noticing with much more instrument, I don't even need to have that if I have that SMT, pre-market SMT. So essentially before 9:30, if I have that SMT established, most of the time if I have the breaker form, and I kid you not, the breaker don't even need to touch the fair value gap on a higher time frame, which is mind freaking blowing. And I just want to share because I'm able to go down this rabbit hole and then perfect my model further and further because the win rate for that specifically is like I'm still testing. I'm still within like a year and a half of data, and I want to expand to like three to 4 years. But it's quite amazing how when you master, you talked about the model that I think it was probably the 2024. I was thinking maybe 2023, but I think it's a 2024 model. And the mentorship that I've gone through that probably give me this idea probably as of late or recently. But it's quite amazing when you study ICT. One of the things people make a mistake of when they're trying to build a model and essentially develop something that they can call their own is that you cannot just copy and paste. You have to be a student. You have to come with a mindset that, okay, this is simply the foundation and the framework as to how I can operate and go and look at how past action can essentially behave. And the most important thing is learning how to think, not what to think. Right? Understanding why things operate the way they operate and be so curious and infatuous with trying to understand
So,
why.
layering the concepts, is that fair, Fariana? Do you like that
uh,
term?
yes, that's probably like the perfect representation of that. That's probably the perfect representation because there's so many different confluences. But one thing that I definitely appreciate is like the picking of a few concepts, thing that I believe might be correlating between like, for example, when I was trading, like when my MX model, I utilized an MPL, right, major psychological level. I utilized key levels, essentially like an RL to ERL for the most part. That's the oversimplification or some level of simplification of that. I utilize weekly profile and maybe one more concept in addition to that, and then my macro, and that's
I
about it.
love that.
I don't try to complicate it, And I have an entry model, the unicorn breaker. I know you like to utilize the inversion model, but that's for my personality. I know that's what works best for me. But you don't really need to complicate it as much. And finding the right people to listen to, like obviously this type of listening, this type of space where you can listen to people that are obviously going to break down that model, that can show you success, and then that can give you idea of like how to construct a successful model is very, very important. But I just want to let you guys know, obviously, like some of the things that I'm currently working on. Like I
That's
have.
that's great, brother. I love it. I just want to say quickly. I mean, I love you, but I got a lot of hands up, and I'd love to get to everybody. And I want your thoughts and 2 cents as we continue collecting more thoughts. Is that okay?
Yeah, yeah, definitely.
All right. So Mauricio had his hand up, and then we got
Thank you,
Dom,
kid.
Hippie, and Persian. What's up, buddy?
Everything good? Everything good? You've been, we've been talking on the phone for several days. That you've been telling me to that I should come here and tell my story, and I think that with Michael here actually will work for me as a therapy because the rough path that I've gone through the past year. So with that said, Michael, my story. Basically, I'm born in Colombia. I moved to the States for undergrad in 2003. Did real estate finance and real estate development. Started working at 2008. Got married 2013. Have three beautiful boys, and and throughout 2008 through now, I've been in real estate, but the way that I got into the market is in 2020. Miami was a completely, changed city with all the New Yorkers, everyone coming here. That was a very, very lucrative year. It's been my best year in my entire life. And then 2021 and 2022 it started slowing down like big time. By 2022, I had this FOMO with all the people around me that they just went and buy any stock in 2020 and they were making money. And I always had like a passion for Wall Street. I always wanted to go to New York to work there, but never had the opportunity. And unfortunately, I made the mistake to get into the market in 2022, thinking that you know that I've been successful in real estate. I can do, if other friends of mine are doing well in the market, I can start buying good companies. And that is the year that I started, putting a lot of my net worth that I built since 2008 into the market, and I got completely crushed. On the way down, the market was basically making a retracement, and that year I got panicked. I lost over $1.5 million, and it was a completely disaster with my family. Like it was a chaos. It was a completely chaos. My wife always asking me like, "Why are you like so moody?" With my kids, it was just a completely horrible years, 2022, 2023, and then it got to a point that I say, well, I gotta stop. But the thing is that I compete for the national team as a volleyball player in my country, so I was raised with a lot of like discipline and with the mentality of not giving up. And I say, you know what, I'm not giving up, and I need to, I'm just gonna continue. I started like, obviously after in 2023, I tried everything, moving average, statistics, the RSI, like the typical stuff. And it might sound like kind of weird what I'm gonna say, but I'm very Catholic, and I ask God to give me, you know, some light because I was going through a lot of pain, and and uh, and Michael, I 2 days later, randomly, I got to know you, and I started, listening to your content, and and I started studying it, and it's been a blessing. It's been the light of the tunnel that I asked God. I resonate a lot when you said that you ask God for that gift that you're giving to the community. Uh, Quite frankly, the Lord knows that I'm saying is true. Um, I don't have, anything to come here and just BS. And it just, I haven't stopped working. I still have my goal to basically get what I lost. It's been really painful to see like all the hard work just vanish like that. But it's the learning curve. It's the lesson that I had to pay. I understand. But the important thing for all the community is that I'm for real. I don't trade prop firms. I started with my own capital. I still with my own capital. Um, on the bright side, I see a huge opportunity in the markets. I raise big money for multifamily developments. I have to deal with a lot of families, wealthy families, and I just see a huge opportunity in the market, for people, especially on the second and third generation, that they think that real estate is boring and they're just getting all into Bitcoin and all of that crap. But the point that I want to make here to everyone is just like, besides all the controversy that we have in social media with the ICT concepts, this is this is my story. The story is that I was finally able to find an edge that provided me to know when to stop, that provided me a framework. It's not perfect for me. But it has a line in the sand that I never had. It has concepts that had made me profitable. This is gonna be the first year that I'm gonna be profitable in futures, and I'm on the way to recovery 2026. I hope that is the year that I start seeing green. And I'm sorry if I get a little bit, sentimental, but it, this is the first time that I'm saying it publicly. And thank you, Michael.
Listen, I want you to know something. I have to be careful because of privacy with a lot of students. I've had the privilege, the honor, the the sheer pleasure to teach many individuals around the world. And a lot of folks came to me with very similar situations. I've had people that came from mergers and acquisitions. I've had people come from failed businesses and enterprises where they've lost millions of dollars and they were just completely on the rocks. Marriages are gone, or on the verge of. You know, I hear you and I know that your pain is real because I've seen similar, and please permit me, but I've heard worse. And individuals came through all of that and came and climbed out, and you don't know the success stories because a lot of people don't want to endure what you just had the courage to do. You stepped out here on the internet with people listening, and I'm sure people will be listening to this as a recording later on when Kit makes it available. And you're going to have an impact on someone that's been quietly sitting there thinking about, like, that's I can hear what he went through, and he has more courage than I do because I would never come out there and tell the world that I lost $5 million. I would never come out there and tell the world that I lost $3.7 million, in my retail business. That I just failed at. I thought I was going to do very well and didn't do well. And investing, learning to invest in their own hands, learning the skill set, cutting out all the cancerous perspectives that people are going to tell you that it's not for you, it isn't going to work for you. These individuals went the same path you're on right now. And that That time when the locust has consumed and stole from you, all of that lack can disappear. And it's important for you to have that faith and that hope, because what you're doing is you're learning to invest in yourself. All you did was sow a very, very expensive education. The only thing you did differently is you paid a whole lot more upfront for an outcome that's destined for you. You have no reason to feel unnerved, ashamed, or embarrassed, because I love people like you. I love people like you because you have the courage to come out here, wear your heart on your sleeve, and say, you know what? I broke myself. Nobody else is at fault. I'm going to correct it, and I'm trusting God that's going to give me the ability, the wherewithal, the wisdom, and I'm going to give him the credit in the end. And I believe you're going to get it.
Thank you, Michael. Thank you for your kind words.
I don't know if people are really truly going to understand the transfer of energy and emotion and thought and the conveyance of what's happening here. I get emotional because I understand the pain, and I think Michael does as well. And what Mauricio is coming up here on Front Street and saying, it's powerful, it's therapeutic. And when you have to come to the chart and reconcile with your loved ones, that's what Mauricio is saying. And as someone I'm very fortunate and blessed, and I get to understand the interworkings of the mind of this trader who came from a very dark place of despair, and he's found hope. And that's one thing I think is a very common theme in a conversation like that, is the ability to dust yourself off and get back up. Finding sanity in an otherwise very difficult circumstance. Traders are going to understand that. A lot of traders will. A lot of traders will. Some folks don't. But the longer you're in the game, and this tax, this toll, this cost, this expense that we have to the market in our ability to learn, um, I can stand here on Front Street and tell you how expensive and how difficult and how painful that can be. And it's a very sobering thought, the difficulties, the challenges, the pain. And that's often overlooked. That's often ignored. It's often glossed over. But something that we do here very specifically at Trader Roundup, as Michael so graciously said, is we love and we embrace that pain, because there is therapy, there is light on the other side. And as desperate and as difficult and as challenging as times can be, dropping to your knees and putting your faith into something bigger than yourself is very touching. And as traders, digging down and finding that, I want to call it intuition, because there's a voice inside that we have to calmly come to terms with. That's not easy to come to terms with. It's very difficult. I know this. Seeing price does not make you a good trader. Knowing how to read price does not make you a good trader. It's a step. Mauricio taking, and again, as I see, as Michael has said, putting this work, this knowledge in your hands. There's a level of art being like, I think of clay, and what can you do in shaping these concepts and working these concepts in your own hands. The power of the knowledge in your hands is what's inspirational. And as someone that's been able to watch Mauricio literally say, in private, the same way he's saying here in public, of how he has found a sense of clarity in the market through following these concepts and by believing in what he sees. That belief can't be taught. It has to be experienced. That belief is, you can never give that to someone else. You can talk about it. You can explain why, but only you are going to be able to find the resolve to click the button at the correct time and then manage your risk accordingly and survive so that you can thrive. And Mauricio is telling you he has survived. He has fallen to his knees. He has gone through insurmountable challenges, and he's here to talk about it.
How many people?
It's been great.
I'm sorry. I'm sorry.
But I'm sorry.
I
No,
was
I was
just
just
about to
gonna
say,
say
like,
that.
how many of you listening would have the conviction to want to even try if you suffered as much loss that this gentleman's making known? It's just it's admirable. It's courage. It's obviously a work of faith, and I'm convinced that there's a large degree of people all around the world that probably wouldn't even muster up the consideration to even try, and for you to even make that attempt, I commend you for that.
Thank you. And I made a promise to God that just the same as you did. I made a promise to God that if I'm able to recoup the the loss, I will donate a lot of my gains moving forward with that money. I'm gonna help big time a lot of foundations that I know in my country, Colombia, that need help. And I told him, I said, listen, if it gets to a point, which I promise that it won't, but if it gets to a point that I get cocky, if I ever get cocky, just take it all, take it all, take it all. But I'm here to serve you, and if you show me that I can do it, trust me that I'm gonna be here a server for for forever. And it's happening, Michael, and I see it on, and I, I only can tell you that I get like super emotional, and I tell everyone that this works, this works, and I hate, really I hate when people like start like fighting with the concept and whatever. But at the end, what I said to kid is, you know what, I just keep moving forward. I made a promise, I have a goal, and let's just let's try to get everyone in sync, and let's see how we can help each other, because this is war, and we're alone. Whether you're trading from your basement, from your office, from whether you're like a X market maker or you were on the floor. I see here, for example, Pax trade. He's a trade guy that I follow him, and he talks very well. And at the end, he just trying to share the story, be honest, and see how you can help other people. And at this point, this has been like real therapy for me to share my story and say that I fucked up, that I made a mistake, but I found an edge, and I'm just climbing out of, and 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 it just because of your teachings. That's all I can say. I just thank you for that.
Hey, Maurizio, this is Pax. Can you hear me?
We can hear you, brother.
Yes.
Jump in.
All right, listen. I am. I just clicked into this and just been listening to you for the last 10 minutes. My heart breaks for you. I don't know if you have a family or not. Um, I've been where you are. I've been, way. I just got off the phone with my oldest son, who's 26 years old. We were kind of talking a little bit about this. I had a net worth of north of $20 million, and I created all of that money by trading. My life changed. I got divorced. The pits changed. Business changed. And within 12 years after the Great Recession of '07, '08, and then after MF Global failed in 2011, I blew myself up and I lost everything that I had. I sold my house, which was, I paid cash for and lived in the most expensive area in Chicago. And I restarted my life and I restarted my trading. I was formerly one of the biggest traders in the NASDAQ pit in the world, actually one of the biggest independent NASDAQ traders outside of, anywhere. And I went back and I was trading 1 lots and 2 lots and 3 lots and 4 lots and 8 lots, and just learning how to be profitable again, and I don't know much, if anything, about the way that you guys trade, but I do know exactly what you need to do in order to be able to make it back from the depths of the abyss that you are in. You're not alone. This community of people right here are showing you this. This space that Kit and Michael, I don't know him. I've never spoken to him. I've never interacted with him. But the space that he and all of these guys and women are holding for you, my brother, is telling you that there is a God and you're not it. And there is a community that you're not an island and you're not by yourself. Whether you're in Colombia or you're in Chicago or you're in St. Louis or you're in Southern California, my brother, there are many of us who have been through where you were and have come back stronger. The main difference of my life now is I've had more money, but I've never been wealthier. I've achieved all my financial goals that I set out in 2013 when I started trading again, about 2 years ago. But the difference is my marriage has never been stronger. I'm 57 years old. I've had tremendously profitable. Now, I had a very profitable week. I've had better weeks, but it's 6 o'clock on Friday night, and I'm not out drinking martinis, eating steaks. I'm at my club working out. I will go out and have a gigantic steak, but I'm working out first. I spent I've got 5 kids and I spend time with each of those kids. I've spoken for at least an hour to each one of my kids today. I make time to make sure that I share my experience, strength, and hope with other traders that need to know that that you're not going through this alone. Okay. Trade the way that you trade. Here's another thing I wanted to say too. You don't need to make grandiose promises to God. When I was at the depths of my abyss, when I was at the depths of my despair, I didn't ask. I never prayed for me to recoup my losses. I never prayed to recoup my net worth. All I did was humbly and simply ask God to give me gratitude. And when I found myself having gratitude, then I humbly and simply asked the Holy Spirit to illuminate my path forward so that I knew what to do and I would be able to provide for my family again. That was it. And that, my brothers and sisters, that is what ended up making me wealthier than what I ever have been. Not richer, I've been richer, but wealthier. And there's a real difference. And anybody who's been through the fire and didn't burn to death, or has been through has been through the water and haven't drowned, will tell you that there is hope. Live in faith, live in hope, live in love, and move forward. Move your body, work out, pray, meditate, breathe, and you'll be okay. And God bless you. DM me if you ever need to talk, okay? I'm always
Thank you, brother.
available to you or any of the rest of you that are going through this.
And Pax is literally what he's saying right now. I mean, he runs spaces. I mean, he prays the rosary. Pax was in the seminar. He's a very strong leader in Christ, in his faith, and he leads by example. And I want to just say thank you, Pax. You've been an inspiration to me. I mean, waking up one day and actually praying to Jesus, really saying Jesus's name. I think I said Jesus's name in your space, maybe I think 50 times. And it just brought me to tears, bro. Like going into a trade and just
Yes.
celebrating Jesus as often as you did in your space, bro. Again, high five, man. Just high five.
Thank you.
This is
Thank you.
awesome.
I'm working out in a shirt now. And at the back of our shirt says, it's got a gigantic cross on it and USA on the back of it. So I mean, I wear nothing but I work out in an expensive club, but I wear nothing but Christian shirts, Catholic shirts, and shirts that kind of illustrate what the values that are important to me, because it's not, um, again, part of Kit, what makes me wealthy is the love that I have in my life. Here's another thing too. A couple years ago, I almost died. I have AFib. And the first time that I had AFib, it caused heart failure and it caused my heart rate to crash. This was a year and a half ago. My heart rate was at 15 beats a minute for about an hour. And I'm laying there thinking I was going to die. And not one time did I think about my money. Not one time did I think about, my cars or my houses. Not one time during that period did I think, did I have enough? I thought about the love I gave and the love that I've received. And I thought about the love that created me, and that's it. That's all that's important. That's all that's important. Everything else takes care of itself.
Pax, you don't realize this, but again, like just as a host in the community here, there's like, and you don't know Michael, but you two have so much more in common than I think you realize. And again, you don't know him the way that the community does or the way that I do, but just as a friend, it's funny. You guys are similar age, and there's so many similar parallels just in how you both lead and how you live your life off the charts and how you talk to folks that you're around and how encouraging you are. And I just want to tell you, whether you realize it or not, I don't think I'm the only one. I'm speaking, I think, the elephant in the room, that people that listen to or know you, Pax, and that also listen to or know Michael are going to draw a lot of parallels, my friend. You guys have very similar stories, whether you realize it or not. And it's kind of cool being, again, an observer of your story and, where you and how you've been through. I mean, I found you through social media and your trade style and how you trade and your reputation preceded itself, Pax, within the community. And I say that, with love. And I think Michael also has a very similar kind of thing where his reputation will precede him. So people will have their opinions before they might get to know the person. And as someone who's got to know the person, or at least listen to them in detail, there's just a lot more common denominator than you guys might realize. So I just like bringing that point to the table.
Thank you for saying that, Kit. Thank you. I appreciate that.
I agree. I
I
agree with that.
appreciate the fact that you came forward and you gave a stage for God, because in this industry it's all about me, ego, what I can show the world that I can do with my own hands, and not give the Creator the opportunity to at least get the credit for giving us our breath, our inspiration, our faith, because he's the author and finisher of our faith. And I love hearing other people. And I've had the privilege to train other traders that came from the pits when everything went from open outcry to electronic trading. I was inundated with guys that literally were like, I don't know what I'm going to do now. I'm used to being down in the pit. I'm used to that chaos. I mean, that was my grind. That was my edge. That was my whole thing. And if you took the initiative to come out and say what you did here, I would love to hear you give a few minutes of what you had to overcome coming from the pit's perspective to on-screen trading.
Well, it's I don't know. I had to overcome myself. On the floor, I was the market. I was the market maker. Yeah, I traded in the Nasdaq. I helped create the Nasdaq. Yeah, I mean, period. And I traded anywhere between 10% to 15% of the daily volume for my own money and my own accounts. Nobody else's. I never managed money for anybody. And so, when, like right now, the algorithms are what move the market. The HFTs, the algos, they push the market wherever the hell they want to for millions of different reasons. In those days, if I put my hands up half bid, small traders were 2 bid, 3 bid, 5 bid. And then paper would come in 60 bid, I'd go 70 bid, and the market moved that way. And I'd buy them and sell them, and that kind of stuff. That was incredibly difficult to replicate on the screen. I'm not a market maker on the screens. I'm a market taker. When I was blown up after MF Global failed, I left the hog pit and I was trading S&P. I was trading Nasdaq, and I'm trading like I was on the floor. I'm buying 50 lots and 100 lots and trying to press the market higher. And the algos don't give a shit who I am. They're just banging them away. Another thing too is I could see the volume. I can see. I knew who was long, who was short, what traders were long and short, who was, likely to get squeezed. I knew what side the funds were positioned, and I can see the volume. I can see they're adding. I can see they're taking them. Richard Dennis was a huge fund trader. Tudor Jones, huge. Tudor's broker would come in and start buying 1,000 lots. Well, I'm not going to sell those. I'm going to start buying them with them. If I'm already long, I'll sell them a few and I'll help encourage the market higher. There was a lot of ways that the market moved, and it was all through human hands. And because I can see the volume, I could size up. If there were 100 lots coming through the pit, well, I knew I could trade 100 lots. And the Nasdaq was $100 a tick at the time, so it's $100,000 every 10 points. If there were 50 lots coming through, I knew I could trade 50 lots because I can get out. Can't replicate that on the screens. No matter how much you want to, well, it's very difficult to. No matter how much I tried with market profile, buying profile, or order flow things, you can read the volume, but it's very difficult to make those decisions, size up and to size down. So, the technicals are the technicals. You're going to draw lines on a chart. You're going to see the trend lines, and that doesn't change. Support and resistance, you're going to see those, and those don't change. The moving averages, you see those, and those don't change. But the fact that I'm a market maker, that I was a market maker and now I'm not, the fact that the market will run me over and not care, about me, and I mean, it did on the floor too. But nobody was there to say, Pax, you suck. Pax, you short, I'll help you out. That didn't happen. Um, and and I don't know, who's positioned. I don't know who the counterparties to the trades are. Hey, 100 at even. I'll buy one. Who are you? I'm Goldman. All right. Well, I'm not going to buy those evens because Goldman just sold 10,000 and got another 10,000 to sell. You see what I mean? I can't buy one I can't buy one. If there's 500 or if there's 100 offered at even, I can't buy one and say, who are you? I have no idea who they are, and I cannot see the volume. I cannot, to learn how to size up and size down was very, very difficult. To learn when to press my trades and when not to was very, very difficult. Ultimately, the more things change, the more things stay the same now. I still, on the floor when I was making the most money, I was trading the breakouts from the opening range to targets. And I did the math the same way that I do now. So that was really the answer, Michael, is I don't know if that made sense to you or not, but it was really the short of it is that human beings control the market, and I can see who the counterparty was to the other trade. And I know which side they're positioned, and it was easier to trade that way than it is now. Now it's just numbers on a screen, and what are you going to do? Hard. But
No, I
life
appreciate
is
it.
easier.
I know what you're saying. I follow you. I'm quite certain that there's a number of the listeners that are not as experienced or whatnot, or even knew how the pits actually work. Probably went whatever their
Yeah.
head. But yeah, I love listening to guys like you. 'Cause you were like a hero to me because you were down there, like you were down there in the war of it all. Like you could see it. You could see the emotions. You could see the roar. You can see when it was dry.
There was a guy. That's kind of a stupid story. There was a guy who put. There was another trader who was a big guy who stood on the other side of the pit from me. He put a guy in a seat. He put a guy in a membership just to stand next to my and on a headset to stand next to my clerk to report back what my positions were to him. So if I was short 50 or short 60 and the market was rallying, he would try to bid the market up and try to get me to puke my positions out, right? So my clerk figured it out. He's like, Matt, Nico is trying to, his clerk is telling you he's telling Nico what your positions are. I'm going to kill him. Don't kill him. If I'm short 50, tell me I'm long 50. So I'm short 50, and my clerk, my clerk would say, hey, Pax, you're long 50. So this guy would start pressing the market, trying to squeeze me out, and he's doing the work for me. Meanwhile, I'm giving brokers orders, pay 40 on 10, pay 30 on 10, 20 on 10, and pay even on 30. So now he's offering the market down, trying to get me to puke my longs. And he's selling me 10 lots all the way down. And now I turn around and go, all right, that's it. I'll sell 20 at 10. And a broker turns around and goes, even on 30, sold. Thank you, Nico, you dumb motherfucker. Excuse my language. That went on for about a year.
Can I just add, this is pretty cool. It's actually fun because Michael's not as familiar with the way Pax trades, and Pax is utilizing a DOM, but from a candle or from a chart perspective, he's trading an open range breakout. So, and the way he's laddering an open range breakout is where and how he's cutting his losers short, and he's letting his winners win. right? So I'm just trying to add context packs in telling the story a
Oh
little
yeah,
bit.
yeah, all good.
I'm not trying to like steamroll your trade approach here, but it's interesting because again, Michael has a lot of concepts that are around in open range as well. So as someone who utilizes a 30-second open range that you utilize as an algorithmic pivot, and then also utilizing some of the components that Michael teaches his community, again, there's a lot more similarities in what you guys are doing, even though you're doing it in completely different ways. Again, I realize that you're coming off of a DOM. You're not looking at the TA. You're not really looking at even candles or candle science in any regard, where Michael, on the other hand, is looking specifically at the candle and that creation and formation. But again, as
Well,
someone,
Kit, let
as
me explain this real
yes,
quick.
please
So,
do, please do, please do.
like Michael, I listened to a podcast that Michael did with I don't remember his name. I did a couple with him too. And I remember Michael, you started trading in the '90s on an AOL dial-up. I remember that. So, you know, on the floor in the pit, I had direct access to price. In order for me to look at a chart, I had to walk out of the pit and I had to stand in line at a computer. We call them CQG machines. I had to go stand in line at a CQG machine, print off a couple of different time frames, and then go back into the pit. And I would have to keep those charts by hand. Off the floor traders did not have direct access to price, but they had direct access to technology and to technical analysis. So now, on the floor, because I had direct access to price and I helped move it, create it, I didn't have to try to predict where price would be in 5 minutes or 10 minutes. I could just trade it. So if I was wrong, I got out. If Goldman again was 100 at even, I turned around and bought them. If Goldman came back in and said 100 at even, I sold them at 90. I got out as quickly as I could. I didn't turn around and buy more. On Off the floor, you had direct access to technology, and you had to try to figure out where the market was going to be in 15 minutes, 30 minutes, an hour, and how it was going to trade. Because it might even take you, if you're a small trader, it might take you 20 minutes to get the order into the pit and get it filled. So there was a lot of different mechanics off the floor and on the floor that gave us different ways of looking at the market that continue now. Now, ultimately, as you're saying, I think to your point, Kit, is the market's only doing one of three things at all times. No matter what time frame you're looking at the daily like I do, or you guys are looking at different, shorter time periods. We're going higher, lower, or nowhere. And the tools to be able to help determine that are the same basically in 2025 as they were in 2005 as they were in 1995. It's just how we approach it, how we trade it, how we manage it. And that's what is a bit different. So Michael comes from a different tradition than I do, but ultimately we arrive at the same basic, purpose. I'm here to make money. I'm not trading to be right. I'm trading to make money. I'm not an analyst. I'm not, I'm not paid to think. I'm paid to react. See what I mean?
Love that.
Yeah, I love it, man. I appreciate you coming forward.
Well, thank you for inviting me. Thank you for engaging with me, Michael.
Can I just tell you, my DMs are blowing up, and they're like, "You need these two, like whatever you do, don't let Pax and Michael stop talking." There's so much gems between the accumulation of information here.
See,
So,
the reason
just so you know, the DMs are on fire.
the reason that I that I saw when I saw Pax and I saw Michael, these two gentlemen are like people that I really like. One is my mentor, the one that I learned the concepts, and the one that I've been able to make all these effort and climbing this hole. But Pax, I started following him like about 6 or 7 months ago, and it just like the blend of these two gentlemen, it just what keeps me going. So I'm super grateful that that the two of them were able to exchange some words here, and even though they have two different styles.
Yeah, I'm not sure that either gentleman are going to really realize how, I think, profound this resonates with a lot of the listeners, right? I just get to hopefully draw that line there. There's just so much more similarity. There's so much more commonality. And when you deal with stark differences, and sometimes people, find reasons to overemphasize their differences versus really coming together with what's common. And, you know, all of the things off of the chart, I think, scream so much more where and how you guys are similar, right?
Well,
Faith is
hey,
so
listen,
important. Helping other people so important. I love it. I love seeing it.
I'll be the first to admit that that I do that. Um, but I think that let me see if I can put this into words correctly. We as traders need to be. Oh, there's a big difference between ego and self confidence, but we need to be self confident, self aware, self possessed. But we also need beyond that most people will ever reach. But beyond that, we also need to have a trading strategy that we believe in, that we have confidence in, and that can border on arrogance. And I know that I can appear that way. Pippi will tell you that. I know that I know that I can appear that way, but that's because I know, that I know what I'm doing. I know it works for me. I know how to maximize it. I know how to help other traders learn how to do that. And again, Pippi will tell you that, and I know Michael knows how to do that too, because otherwise, there wouldn't be so many people out there experiencing experiencing the I don't even know how to put this. Experiencing the this is the greatest business that God has ever invented, and experiencing that joy, experience, in spite of our struggles and in spite of our pain, Maurizio, in spite of the difficulties that you're in, this is the greatest business ever. And when you get on the other side of this, you're going to see this whole experience that you're going through as the greatest gift that you've ever been given. It might not seem like it now. You've got 5 million reasons to think otherwise. But once you're on the other side of it, you're going to be so much better, so much wealthier, so much happier, so much more loving and kind and thoughtful, so much more giving to other people, giving of your time like Michael does, like I do, giving of your spirit, because you've been there, you've done that, and I don't know. I know that I have two younger brothers, and I look 10 years younger than both of them, and I'm older than both of them. One is a Chicago cop, the other one is like a retired salesman. But and that's because I'm moving forward every day. I'm trying to do better and be better. I'm trying to be for lack of a better cliche, trying to be the best possible version of myself every single day. Not just because my wife deserves it or because my kids deserve it, but it took me a long. I had to go broke before I realized, my brother, that I deserved it too. I had to go broke before I realized that God wanted good things for me too, not just for my wife and my kids, but for me. And God wants the same for you. And when you're able to accept it, you're going to learn how to stay out of your own way a lot better. And then, Michael's concepts and, are going to flourish in your life, or, whatever, or my stuff or whatever, you're going to believe in it. You're going to believe in yourself, and you're going to be able to move forward in spite of the obstacles that this business are going to throw at you. Not every day, you don't make money. Nobody makes money every day, but YouTube streamers, no, but at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, you're going to look back and you're going to say, that was the greatest thing that ever happened to me.
Amen.
That's truth.
This is a fucking great space, bro. This is really good right here. This is really good. I love it.
You should make it. I don't know personally how to find you on social media or what you actually do with the community yourself, Pax. But if you could, could you let everybody know what you do and when you make yourself available? I'd love to sit in and listen.
Oh, Pax is on Ninja Trader Live. Yeah, Pax, go ahead, talk a little bit about where you're at. I know you're on YouTube and you live stream, you talk the markets.
Oh yeah, it's exhausting. But Sunday nights I do like a market prep show on Ninja Trader Live with a couple other people, and then I stream Wednesdays and Fridays. Fridays, today Friday streams are not my favorite because I'm trading. One of the things that I've come up with is trading the minis and micros as a spread. So the CME group has me trying to explain that through trading it, so other people see it on Fridays. But on Wednesdays, I stream trades. I don't trade. I'm not going to trade my normal size on a live stream, but I'll trade 8 lots and shit. And I did that on Wednesday. I'm on Twitter, Pax Trader 777. Pax was my trading badge at the Merc, as I think you can see from you guys can all see from my profile picture. Pax means peace in Latin. I studied to be a Catholic priest. I went to work at the Chicago Mercantile Exchange as a runner, make a minimum wage in 1988. I didn't know anybody when I walked onto that trading floor. And by 1992 and 1993, I was making $75,000 a year, which in those days was big money. And I realized there had to be something greater than just making money. So I went to the seminary for 3.5 years and studied to be a priest, and then came back and became a trader. And when I chose my badge, I wanted to choose something that meant something. And I thought that PAX would kind of sum up what I was after in life. So that's where I am, Michael. I do spaces with these guys every so often. I'll do them on my own, and I don't make myself scarce.
No,
That's
they're
awesome.
very supportive.
Thank you.
So hands are up. We have Persian Turtles with his hand up. We've got Dom Trades coming, and we are, it's 7:42. We are going to be wrapping up here. We've been here since 3 o'clock. So I know no one wants to hear that, right? But Persian Turtles has got his hand up. What's up?
Hi everyone, I'm Mentor. Sorry for my English. It's been a
No
while.
problem.
I haven't spoken any language in English, so I'm living in Iran. So it's obvious I can't speak very good. So I just listened to the conversation. It was so very good, and thank you for experience that you're sharing with us. And I just want to talk my model and situation that I have. My model is time-based model, and I'm not inventing something, just ICT, nothing more. It's time power of three for me, and I trade in time that between and every hour between 770, 37, 27, 47, and 57, 47, and 57. It's in macros. So I like to, first of all, my model, the most important thing in my model is drawn liquidity. I should find, first of all, where is the drawn liquidity? So after I found the drawn liquidity, I tried to find a good PDRA and trade in this time, because in my model, it's manipulation of every candle is in 7 minutes. Like today in Nasdaq, I trade in first present FVG when it's reversed and 10.7 to sell side liquidity. I think, yeah. And in PM session, I trade in 315 to 2R. I just go to 2 or 2.R.
Okay.
And
So,
it was
real quick, did you have a question, brother? We're following. I'm following.
no. My question about the situation when we have confidence, but I have confidence, but when I open a trade, I just feel I just want to see the candles going straight to the TP. So is there any mental issue or something I should situation something to figure out how to solve this problem? So I'm good. Sometimes because of this, I traded. My trade is going to against me. Sometimes I close it early. This is my question, and this is my mind. Thank you for everything.
Well, I'll take a stab at it. It sounds as
Thank
if
you.
your uncertainty may stem from a lack of experience reading the tape, watching the market with your model in focus. Two, if it's not that, and maybe a combination of over leveraging. I've seen a plethora of individuals come to me with that same question on a day by day basis. And it's usually linked to them wanting to trade larger size than they're better equipped to do at the time with their present skill set, let's say it that way. And if they haven't been utilizing the model that they're if you come before someone, okay, if you had a winning trade and you came out and said, okay, this is the last trade I took and it was a winner, and you'll be confident in explaining what your model was. And I've listened to this space and I've had people email me and I've watched other students and other traders doing other things, and they're very confident about what they did when it was a profitable trade or when it worked in their favor. And you're going to have to grow to trusting that it's not going to always do that for you. You're going to have a willingness to accept the fact that you as the operator, you as the, well, executor, it isn't going to always pan out for you. And with the increased volatility and all the things that's going on around the world, all it takes is a knee-jerk reaction to something going on geopolitically, and then boom, we have 100 handles instantly. And it's not unheard of to see several hundred handles in 1 minute for NQ. You know, that's volatility that can tear your face off. And you have to have a great deal of respect for that, but it shouldn't also paralyze you. And by having an expectation, what is rooted in a baseline experience, meaning what are you trying to trade? What's the catalyst? What are you trying to enter on? Why should the market go to where you think it's going to go? So where's terminus? Where's the draw on liquidity? Where's that target you think it's gravitating towards? And why should it do that in the first place? And if you're not confident that these things that you're leaning on to ascertain that information, if it's not uniform and consistent each time you do it, then it's normal for you to feel uncertainty. It would be not normal, okay, for anyone else to feel that way. So if you don't have the model well framed, written, and then you review it on a day-by-day basis, not tweaking it, not trying to add new things and parameters and settings and whatnot, simple things. Why are you going to get in the market going up? Pax made it perfect. I say the same thing. You only have 3 functions as a trader: do nothing, buy, or short. It's as simple as that. Now, if you know what you're looking for, if there's so many things that's indicating to you as someone that's been studying price action, everything seems like it wants to go up. There's so richly illustrated in price action that it wants to run old highs. It wants to go to these old highs. Well, chances are you probably are going to look for a long in that. So then you have to know what it is you're going to use as a catalyst to get into the trade. So what's your function for entry? And as I teach us, there's several PD arrays depending upon where you're at in that price leg. Once it starts, then you're going to have to, resign yourself to what is at the market right now. And you're going to just forego the opportunities that were afforded to people that were more astute at the time, the deeper discount entries on a long position. But that doesn't mean just throw it away because you couldn't get that low entry. But expecting the price to run away. This is what I get. If not more than anything, then tell me what the bias is, Michael. Tell me how to know when it's going to go up or down. The second highest requested information, and I've said it many times in lectures, I've said it many times here with Kit's audience and the things I've done in my own Twitter spaces and whatnot, is how can I learn to trust the move that I'm in? Because I want the run to get right to my target and be done with it. And I'm telling you, there's no shortcuts to this. It has to be endured. It has to be done over time, over weeks, months, and years. And traders, I can tell you still to this day, there's some trades when I'm getting in there, I know I've put on more size than I probably should have. Once I get in the trade, then it becomes real clear. I probably put a little bit too much size on this one. And I want it to run. I feel that same impulse that any one of you, that if you're brand new to trading, you want it to just quickly get to your target because that uncertainty. So what I do is I practice what I preach. If I feel like I'm emotionally attached to that trade, I got to scale out of it. And the first thing I do is cut half of it off. Now, some of you might think, well, that's too much of a haircut. I'm not going to take that much off the trade. Because what happens if it runs and I could have got that big run? See, I've been doing it long enough to know that I don't need that next big win. I don't need the next trade to be a big windfall victory. I don't need that. I just want it to follow the model. And I need to make sure that I'm executing under the premises that I've outlined for that model and stay stringent to it, adhering to just that only. So over time, watching your price action with that model, that means no executions in the beginning. This is how you condition yourself. You have to trust what you're doing is a viable model. Just looking at it in static price action in the past, that's noteworthy and that's good for back testing purpose, but that's what a neophyte starts with, and they don't stay there very long. They have to graduate to then watching price action live. That's tape reading. But you can't press the button yet. You can't do that because what you're going to do is you're going to train yourself to be impulsive to reactionary. So what'll happen is, and this is how it happened for me, and a lot of my students will confess if they're being honest, they'll tell you the same thing. And anybody else using some other method would probably tell you too if they're being honest. You know what your model is, you know what you're trying to trade on, but then you can't stand the impatience of not waiting for the actual setup. You sit there and you anticipate the setup. You anticipate the entry, and you get in before you should. What do you think that's going to do for your subconscious? You're inflating the necessity for that outcome to be favorable for you, much more than it would be if you simply would have used the model entry. What was the mechanism that gets you in? Buying a fair value gap, buying a breaker, some kind of support idea. Whatever that function is that you use to get into the trade, now the importance of being right or wrong is such an inflation that your mind now is consumed with it. And the only mechanism that our brain can do to compensate for that is we start perceiving time through the lens that it needs to speed up for us, or we're uncomfortable. Time can't be sped up. It can't be sped up. But when you're in a dramatic situation, for instance, you ever been in a car accident? I've been in several. I sped a lot as a young man, had fast cars, and did stupid stuff. And I can tell you, as fast as my cars would go, they seemed like they were moving in slow motion every single time I was in those accidents. Why? Because your brain is calculating all these things. This is about to hurt. I am about to have some serious shit happen to me. And it's calculating all this constantly, real quick. Our brains are amazing creations. Fastest computers in the world. They'll never make a computer faster than our brain. But you now place yourself in that same situation. You just made an accident happen. You caused this accident. You over leveraged, you anticipated, and then you jumped ahead of the actual setup and you entered before you should have. Over leveraged, and now you have two things going against you. You need this to end quickly. You want it to end quickly, but now because you're in an emergency, how's your brain going to react? It slows everything down. And that's very, very uncomfortable for people that are not used to that. There's a lot of wonderful things you can do as additional studies and case studies for how the brain works, how it perceives stress and anxiety. All these things are actually beneficial for someone like we as traders because we use our brain. We use our brain to determine whether there's a viable risk to be assumed. Is it worth to take that risk? But we as traders, when we first start, the impulsive nature in what we do through our flesh is we want to have that instant gratification. We want to go out and show the world that look what I did. Look what I just made. And you won't tell them this is how much it hurt. This is how scared I was. My balls were drawn up to my ass. Okay, I was scared shitless that this thing was going to turn on me in a minute and I couldn't get out of it fast enough. You won't tell them that because you need to convince yourself that what you did was the right thing because you know deep down inside it wasn't the right thing. You jumped the gun, you were impulsive, and you over leveraged. So right away, you're doing every cardinal rule that a trader should not do. You just did it. And now you're arguing with, I better get out of the trade, or what do I do? Do I stay in the trade? If it wins, wow, it's going to be a big payoff. But if I lose, I already know I did the wrong thing. This is going to suck. So you're caught in this loop while your brain is completely compressing time. It's still the same time everybody around you, but for you, it's dragging. Every 1 minute candle feels like 60 minutes, and they're just stretching out real slow, real painful. So to alleviate any need for going through that, you have to do things properly. That means back test until you understand the model. Once you understand the model, then you have to place yourself in front of price action. But you can't place yourself in front of price action while risking money when you don't know what the hell you're doing. The only thing you're doing when you do that is you're feeding bad habits of concern about the outcome being favorable versus is price continuously giving me feedback Is every single one of these candles printing supporting price? Every down close candle supporting price action to the upside? Yes. Okay, that's all I'm focused on. I don't give a shit whether my stock gets hit or if I get my first partial exit or if it goes to target. I'm watching every single candlestick as it's printing. I'm getting immediate feedback. I want to know, is everything that I'm expecting to see in price action, is this price swing still holding true to what my initial expectations were on it? And if you are focused on that, you're not over leveraged, you waited for your signal, you waited for that setup to be there. And when it was there, your order was executed, because true professionalism is going to be in the form of a limit order, because you know what you're looking for. You're getting your price. Marketing in, sure, you can do it. But I want you to go in with your limit orders, because that way you're getting the price that you want. You're letting the price in the market come to you. That means you're exercising more discipline, patience. You're not chasing price action. We're not buying it when it's going up. We want it to come down to that fair value gap. When it gets it, hits it, then we have immediate feedback. Does it stay in the upper half of it? That's what we want to see. If it stays in the upper half of it, what does that do? It gives you confidence. You can't worry about your stop loss getting hit or the elation of you getting to your target if you're focused on every single candlestick and what that criteria is matching for the model. If you haven't spent the time watching price action, building up to that level of experience, seeing it without monetary risk, without the reward, without the punishment of being wrong, that's the missing piece that everybody skips over. They all just want to get out there and start making money. I want to be the next guy that makes $1 million. I want to be able to go and say, this is what I just got to pay out. I just hashed out this much millions. And it only took me this much time. I'm not trying to, reduce what these people are doing, because it's commendable. It's wonderful. I know what it feels like to make that first $1 million, but wait till they have what it feels like when you lose $1 million. You want to puke your guts up. You don't want to get out of bed. You don't want to face your wife and kids. You don't want to do that because you caused it. So to avoid those types of things prematurely, you have to do the right things. That means there's a step and a place for everything. And wanting to see the candles run to your target, everybody wants that, man. Everybody wants that. But not over leveraging, not rushing the setup, not predicting or anticipating the setup before it's there, just because you can't stand the impatience of waiting for it to come up. That's indicating, here's what it's showing you. You haven't done enough work watching real price action and trusting that the model that you're looking for delivers. You just know that there's something to it. So the lottery's $950 million. Everybody's probably buying a ticket. And if I don't buy one, shit, I can't win it. So let me just get there and just blow $50 on it. It's impulsive. And you can't be impulsive about your trading, because if you remove all the things I've talked about here, it won't fix everything, because you're still going to bring baggage to it, your own, quirky things, that personality problems. We all have them, character flaws. But it'll do the most in terms of staving off these things and help it a little bit more streamlined, get to your outcome that you want.
Thank you so much.
Dom, you've got your hand up. I don't know how you follow that.
No, that's great. That's what we're here for. Appreciate you spending time here with us this evening. Pax Tube, it's good to see you here. I got a quick question, easy one, comparatively speaking, I think, hopefully. When it comes to the raw data and statistics trading, like spreadsheet traders, quote unquote, like, or quants, right? You've often referenced the importance of data too, like whether it's data in our own trading or the 70% probability of a higher low for the week being in by Tuesday's London session, or the RTH gap filling half the way, 70% of the time. Like, what are your thoughts on purely statistical trading and how it can be most effectively paired with your concepts?
I don't know exactly what you mean by statistical data and how that would fit with what I do. But I think that if any student that spends time with what I'm sharing, you can seriously spend an amazing amount of time collecting data that support or negate what it is I teach. If you're a number cruncher, you can see how many times does the opening range in the first 30 minutes from 9:30 Eastern opening bell to 10 o'clock in the morning. How many times does that gap trade to half of it? And I've been doing it for a long time, and 70% of the time, you're going to get half that gap fill. In and of itself, that's an advantage right there. So for these high frequency trading guys that want to just get in there and look for something right away, and they don't have a whole lot of time to spend in front of the charts, the 10 o'clock people, Stephen King wrote a book or a novella or something to that effect, and he called it 10 o'clock people. And it was based around people that went outside and they smoked around 10 o'clock. They would take their smoke break. And that was kind of like the funny thing I thought about the 9:30 to 10 o'clock is that's the 10 o'clock people's trade. They're looking for that half gap fill. They don't have the patience to stay for that full gap closure. And they know that sometimes the full gap doesn't always happen. They're not astute enough to know when it's going to occur. So by taking that data and keeping track of it, and this is something I've advised all you guys to do, is when there's an opening range, how large is the opening range? Where did we settle previous day to where we opened at regular trading hours? We see in deference to those 2 price points and how often it goes to half gap fill, 3/4 gap fill, 1/4 gap fill, full gap closure, and then what happens when it fills the gap? Does it go further? And then if it does go higher above the gap, once it fills, it wants to go 1.5 times the gap, then 2 times the gap. So it'll give you all these things that you can number crunch and collect data. And what that does is it gives you a baseline for experience and know, okay, I'm trading in the first hour trading. So that first hour's window of opportunity between 9:30 and 10:30 Eastern time, there's a plethora of setups. There's a huge number of setups. Every single high frequency trading algorithm is doing a lot of work in that first 60 minutes. Most of it's being shoved in that first 30 minutes. So when you're going to get that first imbalance, that first presented fair value gap, that's why it's so important, because that first imbalance, that first fair value gap, that forms between 9:30, well, technically 9:31 to 10 o'clock in the morning, you carry that gap, push it through the entire day. You'll see it being used several times. Why is that happening? Because the same algorithms are going to notice that was in existence in the first 30 minutes. They're going to play off that again. It's useful information. So how many times and how many setups do you get? How many setups to the long side when your bias was initially bullish for the day? How many times did that first presented fair value gap offer setups? What time did it form? Is it happening inside that macro time, the last 10 minutes, top of the hour, the 10 minutes after the top of the hour? That 20-minute window, that little sweet spot. These algorithms are referring to that time and then price. So knowing these things and keeping data on it, I encourage that. But anything outside the things I talk about, I'm not interested in anybody else's data. I could care less what anybody else's data. I have a lot of affinity for Larry Williams. He had all kinds of statistics. He had all kinds of data. Man, this guy had spiral notebooks of stuff that just was like, man, what the hell are you talking to me about? When the day goes down, here closes below the day over here in 3 days. I don't need all that. Just tell me, am I bullish for the day? Am I bearish for the day? Or is it too high of a risk for me to worry about it? And I'll just trade tomorrow. And then become a day trader. I could evaluate the morning session. Is it likely to be a shit show? Because if it is, I'll just sleep in that morning or go have breakfast with my wife, and then I'll come back and trade the lunch, or I'll trade the afternoon session. And there it is. So I don't know what you mean by the data, but I am a data guy. Like I'm a numbers guy, but the numbers have to make sense of why else would look at it.
Dom, do you want to expound upon your data collection?
Well,
Give me 3 things that you
I'm
concern
talking.
yourself with. Give me 3 things that you think are salient, that are impactful to you, that are beneficial to you, and what do you do with the information when you get it?
Okay, well, so let's see. Right now, we're talking about the middle of London session, let's say, or the London OU, as it's referred to, or the Asian OU. So the center of a session, or more so here, I got a better one. This will be the first one. So in a time-based range, this style of trading that I'm talking about, we have a confirmation when you break out of one side or the other of that side of the range. Like, for instance, 3 to 4 a.m. would be the ODR in one system. And if we break out the top side of it, there's roughly 80% chance that we won't break the bottom side of that time-based range within that session, to simplify. And then it goes further into 2 sessions later, like we're in New York 1, are we going to pass the 50% mark of the previous session, and what time and how often? And so there's a lot of work that's been done collecting statistics on this.
When you say previous session, what are you referring to? Are you talking about London session or day session, full day session? What are you referring to when you say previous session?
Asian session, London session, New York 1 and New York 2. New York 1 being 9 to noon, and then New York 2 being noon to 3.
Okay. So how are you using that information? What are you doing with it? Are you asking me if there's any usefulness to it? Is that what you're saying? Or
I'm
are
just
you trying
wondering.
to?
Yeah, I'm actually learning about it right now. I'm a few months into a
Mhm.
boot camp with some guys that put a lot of time and energy into it. I've been studying your stuff since early 2023. It's been very beneficial to me. Appreciate you for all that. But I just there's like this friendly rivalry, sometimes not so friendly, on Twitter between the spreadsheet traders and the ICT guys, and like I was curious because I hear you talk about data so much. I don't understand what the disconnect is or why there is any sort of rivalry, really. And so I just thought I'd ask you about it.
It's a locker room. That's why it's a locker room. Everybody wants to see how big each other's dick is, and we all want to measure it against each other. And we want to show how thick each other's wallets are. That's what this whole business is about. It's always been that way. We're like cavemen. That's how we interact with people, especially with traders. You got more than me. Let me prove to you I don't. Or let me prove that you do or don't. It's always been that way. It's always been that way. But what data you're collecting and how is it useful, it gets down to just where's the rubber meet the road. And the things I talk about, I can't answer for everybody else's observations or what they're discovering in price action and what they're inspired by, by me or people like Pax or anybody else out there that's talking about trading and price action. I mean, it's easy to get when you're brand new. It's very easy to get inspired and captivated. I was captivated by everything and everyone that came out, and like you know, I mentioned it many times. When I came up when electronic trading began. I came up when the internet became a thing. And we had to do dial up and we had to wait for all this crap, the handshaking, the noisy sound and stuff. And sometimes you'd fall off as soon as you get on there. These these ideas that people are trying to chase right now, I think it's a matter of trying to coin something, trying to be the originator of something. And that's like the big thing right now. And is it useful? I mean, are you making money with it? Because if you're not making money with it, there's no value in my opinion, and nobody else is going to see the value in it either. If they can't use it in their own hands, be able to go out there and say, okay, I want to put coin in my pocket today. If it doesn't put coin in my pocket, I don't have any time for it. And if you can't see other people doing that, it begs the question, why bother? And I'm not saying that it shouldn't be done at all. I'm just saying that what's the purpose behind it? How are you going to utilize it? And does it provide any benefit to you making money? And if it makes trading easier for you, then it's advantageous. But if it convolutes it and causes more confusion or one more step that's not necessary, because you want to have very small number of steps. Because the more things and more things and more things you add, in the beginning, it seems like, wow, I used to have a checklist that was so fucking long that by the time I got 3/4 of the way through it, the fucking market's gone. Like it's gone. It's already left. Elvis has left the building. You've done shit the bed. It's gone. You can't do it. Once you have to know what you're looking for. 1, 2, 3, get me in there. How do I know I'm going to place my stop, where I'm going to place it? What am I risking? You have to know all these things before your trade is in the chart. Like, what are you going to risk? So collecting data for the sake of data, again, why are you doing it? What's the purpose? Is it helping you highlight a inefficiency in your trading when you use a certain measure of leverage? You can do things like that. You calculate the data that, every time I size up or scale up in my trades to this degree based on this many number of trades. Like for instance, when I first come up, I wanted to see 5 winning trades. And then after 5 winning trades, then I would scale back to my lowest percentage risk of fixed asset allowance for what I can put on each trade. Why would I do that? Because after 5 winning trades, what's coming eventually? It's a losing trade coming. So I don't want to, what I wanted to do when I first started was I want to make money, risk more, make money, risk more, make money, risk more, and then do what? No stop loss. I'm right. That's what every trader thinks it is like when you first get in here. But what I learned was with real money, you're fighting yourself. You're second guessing every fluctuation, every little fucking tick fluctuation is money coming in and out of your hands. And when you don't come from money, it is heavy. So by having information that's going to be reduced to small steps of application, what is this information going to do for me? Is it going to cause another thing I got to worry about before I put a trade on, or manage risk, or Is it going to aid in things like highlighting weaknesses, inefficiencies, and my own opportunities of following the model? Where's my hiccups? Where's my traps? What am I creating for myself as a hindrance in development? Collecting data for that, that's wonderful. But you know, I don't know what these people are sharing with you. And I'm sure if you went through 20, 30 minutes of explaining what it is, I'm sure I probably would still hold the same perspective as what value does it bring to you? Because it wouldn't bring any value to me. I've streamlined what it is I'm looking for to very small things. If you remember, and I'll say this and shut up, you want to have your model that you can literally write it out on the back of a business card. If you can't do that, your shit's too complicated. It's too convoluted. You have too many spinning parts. Okay, and too many spinning parts, guess what? One small component breaks or breaks down, your model falls apart. Everything falls apart. So you want to have so few moving parts in your model that it allows you to be able to be free thinking, independent, right on time, Johnny on the spot. When the market's offering an opportunity, you recognize it, you're there. You're not thinking about it. You're not worrying about it. You're not wondering about how many times did I do this in the past? Last time my elbow hurt. Last time I had gout. Last time I had jock itch. My market blew up in my face. None of that shit matters. What is going on right now? Is it going higher? Is it going higher right now? If it's going up right now, where did it leave? So where I can place my stop? And how many contracts can I afford to put on and still be within my risk parameter? And that's it. That's all trading is. You're not trying to make it harder than that. And if anybody tries to do anything more than that, they're actually making it harder for themselves to execute under. So I hope it didn't sound like I was beating the shit out of you about what you're doing, because I encourage you to look at other stuff. But what data, is it useful or not? It kind of like boils down to that.
No, that's a great response. I appreciate it. And just like, so you know, like I started studying in 23. I got my first payout like 4 months after I started looking into your stuff. I've been trading for like 2 year and a half before that with crypto and everything. You're the one that actually got me to start trading NASDAQ and looking at indices. And then I had a dry spell and I got, some payouts from Top Step late 23, and then another dry spell. And I just recently had another good run. So it's getting better as it goes. But I appreciate your time responding to the question. There is a gentleman here, just 2 people over from you on my phone, who's one of the guys that runs the boot camp that I've been learning all this stuff I'm talking about, and it is helping my trading in some ways. So I don't know, Kit, if he's got a speaker tag or if we got time to he can explain much better than me what it is specifically that they're looking at.
I mean, bro, spreadsheet trading, collecting information. I think I can speak pretty confidently on that. I don't think I think the question is still, your question is salient. And I mean, the information that you're collecting is going to be salient to your model. One thing Michael has done a phenomenal job at is simplify things so that you are focusing on less moving parts. So as a quote unquote spreadsheet trader, things I look for, the things that we are measuring are an open close box, the highest open, the lowest close, the highest high, and the lowest low. So within spreadsheet trading, we're quantifying measurements from OHLC, which is, again, congruent with all the things taught by ICT. So it's a great question.
Okay.
And Michael's asking,
Okay.
yes, sir.
I think that it would be beneficial from a community perspective that if the gentleman's, he brought something up and he was asking my feedback on it. I shared my opinion. Now, my opinion is isolated from what it is that these individuals are doing. What they're number crunching, I don't know. But
No, it's a great point.
I think that it would be prudent for, if the person wants to come forward and talk about what, because they may bring a better, they may better explain what it is they're doing. And if it's something
I can speak on that.
advantageous.
I don't know who's here, but I can talk about what
I think he's referencing Austin. Austin's utility of an MAE, MFE version of an ATR, which again we're looking at average true ranges and where and how they form, and then where and how we would utilize the statistical probability of it mean reverting or breaking out of the said range. So in regards to specific data and data collection, you're looking at a start you're looking at a stop, and you're looking at an average range in which the start and the stop occurs. I wouldn't say an open and a close. I do want to bring Austin up. He
I
does
was gonna
not
say,
utilize.
bring up Austin. Bring up Austin.
The thing is, I have to. There's folks. I have to.
Yeah,
Again,
but
there's limited space. Hold on. I'm trying to bring him up. We'll get Austin.
he's up. He's in.
Yep,
He's
there
in.
you go. Austin, jump on in. Well, no, there he goes. He was here.
Can you hear me?
I can hear him.
I can.
Yeah, jump in here, buddy.
Dude, I just want to say I've been hanging out listening to you guys. The moment I heard statistics and then ICT's up here, dude, I raised my hand immediately. No, so I'll give you a little bit of a rundown. So basically, we call it using spreadsheets too. It's literally the same thing Nick and I do, but exactly what Kit was saying. Just to give you like a huge overview, I just like quantifying what the market and how it moves. Just like how if you were to, invest in a piece of real estate. I come from real estate. That's what I did while I was in the military, and then I got out. And so if I were to be like, hey, I want to do a real estate deal, let's go 50-50 and let's invest in this property. If we didn't know the numbers of that investment, right? If I was just like, hey man, give me 50 grand and you'd be like, show me the numbers, right? Show me the objective proof that in that area, blah, 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 blah. And so I take trading kind of the same way. So some of the statistics I use is like the statistics of where we're going to make the high low a day, 4 major times, 1800, 3 a.m., market open, market close. I use statistical retracements. So if I know that between 8 a.m. to, noon or anything like that, what is the statistical probability that if we're above, let's say midnight open, because I know midnight open is really important to you guys. If we're above midnight open between 8 to noon, what's the generic probability of just hitting that level? And then when live price agrees with directions that those statistics are still left open for, what they do for me, because I'm an analytical person, is it just gives me confidence to take that trade, right? You guys were talking a little bit earlier about, you need experience with your model. And one of the reasons why people go crazy when as soon as they take the trade, they're wanting to go straight to their TP, right? Or they're scared of the stop loss. Well, for me, I use statistics to make that, to bridge that gap, right? To fix that thing for me, because I like to have a measurable environment, right? I like to know that, okay, if we get below market open, right? If we get below the opening range of market open, okay, cool. Objectively bearish. If we're objectively bearish, what statistics are still left open in that direction of being objectively bearish that are still open for the day? Midnight open, cool. Opening prices 1 through 7 a.m. The midpoint of we call it the P12. It's the first 12 hours of the daily candle, like that type of stuff, right? So,
Hey,
what's up?
Austin, it's Pax.
What's up,
Can I
Pax?
ask you a question real quick?
Yeah.
Can you give me? I mean, we follow each other, and I like your content. But can you give me like while you're giving these examples, can you like add price context to it?
Yeah,
like,
absolutely.
If opening range is 69 even, or
60% reversion back to midnight, right? Let's get back to the midnight retrace, kind of what Austin is known for, right? I mean, Matt Mickey's known for the high low. You're known for the midnight retrace. What are the statistical probabilities for midnight retrace, Austin?
Yeah, for midnight open, that's just a generic starting at 8 a.m. to noon. That's when I anchor my statistic. And that's another really important point is if the statistic that you're using, or if you're using a basket of statistics, that's what I do, it's important to understand obviously the objective metric during the time you're going to operate in, right? So if I'm operating between 8 to noon, I don't care what we do with midnight at 2 in the morning, right? So between 8 to noon, we objectively retrace that area 65 to 68% of the time. And then when it comes to market open, I think, Pax, what were you saying? I'm sorry.
I'm just trying to put like a price context.
Yeah.
Like the midnight open would be 68 even, and 68% of the time the market will do X. And then how do you define your risk?
Exactly. Yeah.
So how wide are your stops? And then how big is your profit?
And you can't say DCA to oblivion, Austin. You can't say that.
Well, I don't do that. Okay. But anyways.
Oh, no, please don't.
So
Thanks.
Can you hear me?
Yeah, I got you.
Oh, no. So I use market open. So market open, as you use market open too, right? So I'll think about market open just like a normal objective pivot point in the day that tells me anything below that's objectively bearish, right? We're accepting when the regular trading hours is open in the day and we close below it, we're objectively accepting bearish price. Now, can we chop around it? Absolutely. But when price is objectively closing below, boom, that's my catalyst. That's my catalyst in saying, okay, now if we're accepting below market open and we're locking in a good high of day, right? Because statistically, market open is a good time that we set a high or low of day, the wick of the daily candle. And that's what we do as day traders. So then my risk is anywhere on the opposing side of that market open range. So obviously, if the market open range is really large, then I have to either, number one, reduce my size. So I also let market open tell me, how much should I position size based on the trade and the quality of the trade that I have at hand. So if I have a lot of distance between, let's say, where midnight open is and market open, then I like to call those my extended cash flow trades, because there's a lot of movement. There's a lot of meat on the bones of if price is acceptable at market open. Well, now the checkpoint, one of the high probable checkpoints, can be midnight open, right? So I take a portion of that move. So my invalidation is anywhere in the midpoint to the other side of market open. And then my target is dynamic to the statistics. So I pay myself. So I'm always paying myself. So I always take a cash flow portion of the move. I think, Pax, you call it your pay line. I kind of do something pretty similar. So it's like I'm paying myself to be in this trade. I'm not just going to let it go 200 points in my favor and turn around, right? And
Using the
then
statistics, using the statistics that you're referring to, and you talk about paying yourself. How do you use the statistics to determine where you're paying yourself? Like what?
I love that question. Yeah. So they were talking about MFE and MAE, right? So if we are accepting, this is actual statistic you can go and measure on the 1 minute time frame, because that's what I trade on the 1 minute candle, when we close below or above market open, just the high and low of the range. And when I say high and low, just literally the highest and lowest point market open formed on the first candle. We have an objective 0.1. So if you take a price range tool, 0.1 to 0.3%. So now this is a floating metric because it also depends on your sample size, but it's anywhere between a 70 to 75% hit rate that we're going to hit at a minimum. We could reverse, we could wick, we could do anything, but objectively 0.1 to 0.3% is like a very common price movement that we expand from. So if I can define my risk, now I don't just obviously trade like a robot. If the trade makes sense, I can define my risk and there's plenty of distance to take that position. Boom, that 0.1 to 0.2%, Michael, that's where I'm scaling out a good portion of my trade to pay myself. Then the excess of that trade, once it's paid for, is those statistics. So like midnight open, opening prices 1 through 7 a.m. The other side, if we're due for an in statistic low of day, right? Like if we have, like, let's say a 2 a.m. low of day and we're due for now a new low of day. We locked in an in statistic high of day at 9:30 and now we're crashing down. Well, now I know that there's a lot of meat on the bone, so I can let that position maybe go for another 0.2 to 0.3%. But nonetheless, 0.1 to 0.3, when we get that candle closure or above, that acceptance above or below market open, that's my area to pay myself, no matter what.
Now
is one question too? Is there an opportunity for you to add to your position along the way?
There is. I don't personally trade that way. I'm not opposed to it. It's just I don't personally trade that way. But here's what I do. If the 10 o'clock hour, so this is another statistic I use, if you take an hourly candle and you divide it into 4, so this is a statistical phenomenon. I can't explain it. I'm not that much of a math nerd. There is a statistical phenomenon that, and Michael's probably laughing because he's probably knowing what I'm talking about. In the first quarter, and I want to say this too, Michael. I really enjoy this conversation because, like what Dom was saying, I don't know why there's.
I can hear your excitement,
dude. I love this stuff.
I know.
I love this stuff, dude. And so it fires me up talking about it. But the first quarter of any time horizon that can be evenly divided by 4, we lock in statistical highs and lows for the rest of that time horizon. So if we're talking about an hour, And the Q1 of an hourly candle is what? The first 15 minutes. So if we take the high or the low in the next 15 minutes, so Q2, Q3, whatever, statistically, the opposing high or low in that Q1 is going to be the high. So if we look at today, look at the 10 a.m. hourly candle today. I was short when we closed below market open, and I held. So Pax, when you were asking me, well, do I hold on to runners? Well, I don't hold on to runners, but I use the statistical favorable price movement that if we're confirming a bearish hourly candle, I'm shifting that excess target to the downside. So I'm basically trailing that target as if I were to add to it. So I keep my good position that I have. And so if we're showing signs of a statistical bearish hourly candle, boom, there we go. We lock in a high at Q1, we take the low in Q2. So now we're due in Q3 to Q4 for the wick of the other side of that hourly candle, aka the low.
What's your sample set range? Like how much data are you using to get to your statistics?
So these are 10, everything I talk about, it's all historical, 10, 20 years of statistics, but then I use current. So here's the difference between how a lot of people talk about statistics and what I do. I use historical statistics to tell me if there's relevance, right? So I'm just saying, okay, is there relevance in the of this market? Is it giving me relevance to have this hypothesis? I'm a lab tech. I was a lab tech in the Army. I come from a science background. That's how I think. So I use that to tell me, okay, maybe I'm onto something. We're retracing to midnight a ton. What's that number? Now in the current market, every day when I open up my trades or my trading computer, I'm looking and seeing what is the current market condition of this statistic. So in the past 50 to 70 days, what is the current price movement doing? What's the current distribution of the current daily candle? What is the current statistic of this level? Is it due for, because there's another really cool, fascinating thing, is just like how we mean revert the markets, we range, all this stuff. Mean reversion is a very good thing that we see all the time. We also mean revert in statistics. So if
Hey,
you're
Austin,
what's up?
let me interrupt you guys.
Yeah, sorry.
I'm gonna go have dinner with my wife. Listen, um, my head hurts from all of this. Fucking, we're going higher, lower, or nowhere. If we're going higher, I want to be long. If it extends, I'm going to add. You guys are I don't know. It's fun to listen to, and it's always good. I always
Pax,
get
can I
good
explain that,
perspective.
Pax? Just to so that way it doesn't sound overly complicated. In very simple terms, guys,
Oh,
what I use statistics for is the checkpoint of live price. If live price is going up, statistics tell me where to have reasonable expectations of where price is going to go. If price is going to go down, statistics tell me the reasonable expectation of where price is going to checkpoint to. That's it.
All right. Can I also just say one thing? I'm sorry. My name is Charlie. You've clearly,
No,
in my own mind. Oh, sorry. Go ahead.
no. Hold on. I got to get off real quick. So
Yeah.
everybody,
Sorry,
listen.
Pax.
Thank you for having me. And Maurizio, it was. I don't know if you're still here, my brother. Man, it was great to listen to you. Michael, it was nice to meet you.
You as well.
All of you, listen. This is the greatest. This is absolutely the greatest business in the world. Don't it's the greatest business in the world. Just do the work, simplify, like Michael was saying earlier. Simplify your trading, make it actionable, find a process that's consistent, repeatable, and scalable that makes sense to you. Live within it. I've been doing this a long time. I know what works, what doesn't, at least for me. And I know what I need to do in order to be able to continue to do the things that I do and simplify my life. I want to be free financially. I want to be free spiritually, emotionally, and physically. In spite of the health things I deal with, or the spiritual and emotional difficulties we all deal with, I want to be free. And in order for me to do that, I need to continue to strive to be the best possible version of myself. And I need to keep my trading simple, and I need to keep it actionable, consistent, repeatable, and scalable. Consistent, repeatable, and scalable will keep me free, will make me free, and will make sure that I'll continue to be free. I love you guys all. God loves you all. Nobody fights alone, as this space clearly shows. And I'll see you all on the trail. If you have any questions for me, or any things that you want to ask me, just DM me. All right. And hey, trade them up, man. The greatest business in the world.
Enjoy your dinner.
Thank you.
Yeah, enjoy PAX. So Charlie was coming in, and I think Austin was wrapping up his point. Dom had his hand up. We are wrapping up. It is 8:30.
I get 10
Just
minutes. I'm
Yeah,
out.
all right, beautiful, beautiful. I love it. We got a hard stop. I definitely wanted to have Austin wrap up his thought. Charlie was coming in for something. It sounded, actually, I'm not sure where Charlie went. So anyway, back to it, Austin. Anything else you wanted to add, brother? Just in the vein of data and statistics and what you're looking for.
Yeah, I'd say just to wrap it up, because I know like how we talk about stats and stuff, it sounds like a lot. All I really do, I don't trade with an actual spreadsheet beside the chart every day. The running statistics, right? That's like a one-time thing. That's like doing your research on the environment you want to operate in. But once you have like that general understanding, dude, I don't touch a spreadsheet. If are we above statistics? If are we above all these areas that we could retrace to? Well,
Austin, you use a streamlined data third-party aggregator. You use a
what's up?
spreadsheet. Don't embrace. Don't you utilize data. Embrace that, brother. I mean, embrace that. But Austin, where'd you go? Austin, where'd you go? Come back up here. We were talking. Anyway, it's. I'll just say this: as someone that utilizes data, the relevance of data within OHLC and within ranges and within time-based ranges are wholeheartedly salient to directional probability. And, the where is the close of the previous range in relationship to where you're opening? What was the size of the range? So your close price is a thing. The position of your close price within the relationship of the previous range that formed. Where is the open and close within the previous range that formed? Right? There are very specific highs, lows, mids that offer conviction. Right? When we talk about data, that's often things that we're looking for, directional probability, right? And I know Michael has zero issues with that. These are components in which he's taught. So us tracking and measuring these things are, again, I think part and parcel as traders. It is awesome within a community to have someone like Austin come up who trades different than ICT, who collects information and is utilizing it within creating his own edge. So it is fascinating within the community of getting different people's takes. So thank you, Austin, for giving us a little bit of a glimpse towards the way that you trade. I think there's a lot of curiosity by Michael Pax, and I'm sure many others, of where and how to actually use data. And I'll just wrap up on this point. And I think it's been made very clear. Keeping your life simple is very, very, very important. So the idea of a spreadsheet or a third-party data collection or aggregator, you can filter and cross-filter that the same way that you're utilizing technical analysis. But that is different methodology. That's different than what Michael's taught. And I mean, it is
Well,
what it is. But
allow me to say
go
something.
ahead. Please, please.
When my stance was, I'm at a stage in my life and in my trading and where I view price action. I went through the process of streamlining and getting it down because I used to do that same stuff. I had spreadsheets. I did all those things. And I wanted to talk to my uncle all the time because he's book smart. He's a finance degree, specializing in business management. So I figured, all this data, look how many times it does this, Uncle Stan. Look how many times you want someone else to see the same eureka or confidence that you get from it. And all the things I'm teaching, I did those same things. I calculated how many times I saw these things. I kept journals for years and years and years. And in the corner, this is how many times the things I was looking at. It happened, it didn't happen. These things I'm looking for didn't work this day. This is how many times it's failed. And I did all those things. So I don't want to come across or have someone misconstrue what it is I've said tonight that like I'm not shitting on the whole idea because if I didn't take statistics from the things I'm talking, when I throw percentages out, I have real data behind it. I'm not just pulling numbers out of my ass. So I'm not trying to say what Austin and the other gentleman that was saying he's learning from him or working with the data or whatever they're doing. I'm not saying or disparaging that it's bad because I understand what it's like. You could hear the guy, like you could hear, he's he's basically panting because he's like, man, I get a chance to share what I've been working so hard and I see there's something behind it. Dude, I know. You feel like fucking Dr. Frankenstein and your shit's alive. I know exactly what the fuck that feels like. I know what that feels like. But you have to appreciate the same way, and I know because I was there before. Now, where I'm at, I understand that you want others to see the same things with the same excitement and same energy and the respect for the data that you curated. You want to be able to show that to someone else and see that same response that you feel, like you're buzzing. Like the guy sounded like he was hopped up on goofballs. It was awesome. I loved it. I was smiling the whole time.
Yeah,
I
he's
mean, it was
very
just so
passionate.
awesome.
It's great to
Yeah,
see.
man, I love it. I love it. But I just don't want it to be misconstrued as that this guy was talking on his ass. I could care less what he thought. That's not what my point was. My point was is I view everything that's presented to me as what do you think about this ICT and would you consider doing it? I can I can say whatever you want me to say and be dishonest and disingenuous, or I can tell you this is my stance on it. Okay, I wouldn't do anything to change what it is I do. I don't want to add anything to it. I don't want to take anything away from it. I'm comfortable with what I do, and I try to promote that in everything. So if this gentleman feels confident that it's helping him, he should never let me, Pax, you, anybody else listening, anybody on social media tell him otherwise. Because it's so hard to get to a position of knowing what we're going to do, why we're going to do it. And if he has something that he's backed up with data and his sample set's ample and it's a viable model that he's applying with the information, who are we? Who are we to say anything about what it is he's trying to do? Because if he makes money, if he's consistent with it, we can't spend his money. We can't tell him he's not doing it right because if he's making money, how's that wrong? So it's important that everybody that listens to me, I'm a bit of a showman. I do these types of things on social media because I know how to use social media. I don't have to pay for advertising. I start a fire and I got gasoline in a can right next to me, ready to add to it when I need it. Because I know how to start a fire. I know how to get a crowd worked up. I know how to get people talking. That is not me.
Profile. I'm sorry.
Yeah, yeah,
Don't mind me.
exactly. Exactly. I got everybody fucking pissed off at me. But they're
You were
talking.
trending on fucking X, bro.
I
That's
know. I know.
hilarious.
But you have to, as a showman, as if someone that's trying to build a crowd and build conversation, you have to be polarizing. Because if you're boring, if you have nothing to bring to the conversation, then nobody gives a shit about you. But I don't want people to take that and say, "Well, this guy's a total asshole." Because I'm not. I'm not trying to. I'm not being that person in real life. I just know how to get people engaged to have a conversation. And that's why I think what you're doing here is it's wonderful because it allows people, number one, to feel. I think honestly, when you were coming up on moments ago before I started talking, I got uncomfortable too because I thought you were getting ready to run over top of him. Like I even felt it in me. Like,
No,
oh
dude,
shit.
I come across that way a little bit, but not on purpose. I mean, not I actually really I love the conversation. I know I can come across wrong. I know that about
We
me,
all
and
can.
I
We all can.
apologize. So,
But if he dropped off, I just want him to know that I wasn't trying to come at him or anything like that, or try to say what he was
No,
doing was so
I'm
crazy.
still here. I
Okay.
appreciate the conversation, bro. And honestly, Michael, like, as much as the social media and stuff goes, like I just genuinely appreciate the conversation because I think what we all try to chase for, and the reason why I am so passionate about statistics, it's not because I think it's the holy grail. I don't think it's something a lot of people even probably do. I think the most important part, whether it's ICT, whether it's support and resistance, so I don't care what it is, does it give you peace on the charts to consistently engage? That's what I
Yes.
tell everybody. Like, I just want peace on the charts. I don't want to take my trade because we all think about being profitable. But Michael, I don't know about you, but I don't want to sit every single day and love something, but feel like my cortisol levels are about to leak out my ears and I
Yeah.
can't even survive 5 years because I'm going to go have a heart attack because I'm stressed so much. So when I was really struggling as a trader, I had to lean back on what was good to me. And what was good to me, I'm a lab nerd. I run
Hmm.
reference ranges, I run patient samples and I have to make sure they're in a range. I was like, why can't I just do that with the markets? And then there we go. And the
Yeah.
same thing with what you preach. I'm sure a lot of people that use your stuff, they feel the same exact way that I feel right now. And sometimes we get so lost in the tribalistic mindset, we forget that, dude, we're all just here to find peace on the charts. That's
Yep.
it.
And we're all doing the same thing. We're trying to manage risk, make money, and survive to do it again the next day.
I love that. And just one last note on statistics. Mean reversion and breakout. Like we're really looking at what are the chances or probability that we might mean revert, or what are the chances or probability that we might break out. And I say that because I'm super intimate with how Austin trades. I'm very familiar with utilizing statistical concepts with your concepts, Michael. So I feel like it's very intimate, this conversation, and I appreciate the the level of passion and the conversation that Austin's brought today. So we're wrapping up. Pippi, Dom, we're wrapping up. Last few minutes. Michael's already made it very clear. Someone's going to be disappointed they didn't get a chance to talk, but wrapping it up. Thank you again, everybody. Pippi, and then Pippi will end it.
All
Pipsy.
right, I just want to end it with, right, everybody that's on here listening, right, the main thing is no matter what you're doing, no matter what style of trading you have, as we see, there's been numerous people that have came up and it's different style of trading, right? But we're all trying to do the same thing. We're all trying to make money. So whatever resonates with you, that's all that matters, right? We come to these spaces every week and we are a community, right? So all of this back and forth, who's better, who's this, who's that, that does not matter, right? Because I've learned a lot from a lot of people that come on here, right? ICT, PAX, right? Kit. I've learned things from Austin, Matt Mickey, right? And everything that I've learned, I made it my own. Okay? Nobody trades the way I trade because I'm an individual. Okay? I took things from multiple people and I made it my own. And I studied that and I studied my craft with how I put things together. Right? And I'm not saying that, oh, nobody trades like me. I'm the best trader in the world. Right? What I'm saying is nobody can take away what you put together. Right? So when you hear these people come up here, really listen to what they're saying and see how it resonates with you, because not everything is going to resonate with everybody. It's not. Right? It's not. But as we see, all we're trying to do is make money. At the end of the day, it's in my bio. Did you make money though? That's all that matters at the end of the day. So I'll leave it at that. Shout out everybody on here. And this was a great space. This was a great space, like for real. I loved it.
As,
An
as a
ICT, can I
reminder,
quick?
go ahead.
Oh, sorry. To an ICT, I just have a quick technical question. I know this entire space wasn't technical related, but I just have a question about your high probability fair value gaps that you introduced roughly 2 weeks ago, the ones forming on the quadrant wicks of the daily candle. And my question around that is, it, you mentioned if there's multiple wicks, we use the largest wick. But what if we have larger wicks, let's say 25 days ago or 50 days ago? Like in today's trading, I was pulling wicks from September 17th, if I have that correct, and I was framing trades against that. What's the filter I can use there to correctly select the right wick to find those fair value gaps that land on those right quadrants on those daily wicks?
As soon as you leave the 20-day look back, your probabilities fall off precipitously down to the 60-day look back. The purest, the most cleanest ones are going to be in the last 20 days, 20 trading sessions. So right away, there's the short answer you're looking for.
Okay.
The further you look back, you're going to have more things that are supporting it, more factual support behind the idea. It can't be just, well, that was a good displacement there. It happened to form on a macro time. It happened to be on a quadrant level of the new week opening gap. All those things may not be enough. Whereas if you just have an opening range or new week opening gap or new day opening gap quadrant, and it's during a macro and a fair value gap forms and it's meeting your daily bias. That's an easy entry. You know what it's going to do. You know how it's going to function. It's going to give you something that's tradable. You don't have that, or at least you'll find if you start spending a lot of time doing it, you won't have that level of sensitivity and I guess conviction behind the moves. As soon as you pass and breach that 20-day look back, 40 days is still good, but 60-day, you're gonna have to demand a whole lot of stuff behind it.
All right, okay. And I can still use those quadrants on RTH gaps, correct? It opens up. I drop the quadrants, and if a gap forms on that quadrant, would you consider that as a high probability fair value gap as well, or just on the daily wicks?
Slow, a little bit slower and say it again, please.
Sure. So let's say today we opened up with 200 RTH gap, and usually you drop quadrants on it. Fair value gaps that creates or that get created on those quadrants from the regular trading hours gap, would
Mhm.
those be considered high probability as well, or just using the daily wicks as high probability fair value gaps to trade off of?
Well, obviously, the first presented fair value gap is the highest probability. The one that
Hmm.
forms in the first 30 minutes, midnight to 12:30, high probability. 1:30 to 2 o'clock in the morning Eastern time, that opening range for 2 o'clock European session, that's high probability. 2:30 to 3 o'clock Eastern time for London Open, the first presented fair value gap in that run, that's high probability to 5 o'clock in the morning. It carries over into the New York Open, 7 o'clock to 10 o'clock in the morning. It's useful there. This is also Forex related to. It's not just limited to the index futures. Um, yeah. So I mean, yeah.
Okay.
First presentation. Kid, I was trying to find a way to get in here with you because I listened to you and you're dabbling in with the first visit to fair value gap. I was going to try to talk to you a little bit about what took place
Oh,
today, but if you look at what we presented today and extend it through the day, you can see how wonderful it was. It was using its quadrants, it was using its consequent encroachment, it was using its low, then it used its high in the afternoon. Like it is like that for folks that talk about statistics and things like that, like when you take just today's first percent of fair value gap, it was a suspension block on top of it. So taking that information and then utilizing it and seeing how it used the 8 o'clock hour, okay, and the 10 o'clock hour, and then the afternoon going into the PM session, and then how it drew back down into another first visit to fair value gap that I'll teach you when I come back in February. But these these components, they're always there in price action. They don't hide from you. And if you're looking for the purest, easiest, run out there and find something to do, it's going to be found in the first 30 minutes of trading because that's the real opening range. And when you see this first imbalance that's showing you displacement, not just some little Mickey Mouse little gap, okay? They're useful, but I treat them like a volume imbalance by comparison. So what I want to see a nice directional move away from the previous candle, and then that imbalance stays there. And once it's printed, then I know that's the first time it happened for today's session. All the algorithms going to see that same thing. They're all going to chime in on it. High frequency entries are going to come in there, pepper it all up. So I know I'm going to have liquidity. I know I'm going to have engagement there. Not because of the buying, selling pressure, moving price. I got liquidity. They're going to tag that level. I don't have confidence that every high frequency trading algorithm is directionally sound. They're in there for volatility. They're trying to get this static fluctuation that's always in the marketplace. Because I'm directionally rooted as a trader, I know where I want to trade and where it wants to reach for. I'm looking at why the market should go higher, why it should go lower. And if I don't know that, and if I don't have strong conviction behind it, then I'm sitting in my hands waiting for more information or waiting for another session. Having the first presentation affords me the luxury of saying, okay, I know what I'm looking for. I know when it's going to form. It's going to be in the next 30 minutes. And I know that these levels carry throughout the day and up to 5 days with high degrees of probability. So you opened up your question with, looking for high probability fair value gaps. If you look at the ones that form, as I'm talking about here and in other lectures where I've talked about the whole concept of persistent fair value gaps, if you project them in the future, you're going to see all of these setups that form are using them. They're using the consequent encroachment, the upper and lower quadrant, the highs and lows of them, and then incorporating the ideas of when we're bullish, we want to see them support the idea of staying in the upper half and not having any interest going in the lower half. So what is that promoting? It's promoting discount sensitivity. It's not allowing price to print the body down in the lower half. So those are all hallmark characteristics of a high probability fair value gap. And it's anchored and rooted to the first presentation based on the time aspect first.
That makes sense. Ever since that you dropped that in 2024, first presentation, that's where I found consistency in the markets. Using the first one after every hour, after 1:30, the true afternoon open after lunch for the afternoon session. The moment I started cherry picking just those fair value gaps, that's where I found consistency and where my stop losses just don't get hit. Having it sit right above the wick of the second candle. Again, trying to keep it tight. And I do get wicked out sometimes, but again, trying to find the perfect balance there between having that stop loss above the second, above the wick of the second, or completely above the body of the third to try to keep it as small as possible to maximize my risk. But appreciate that, ICT. And yeah, you've done an excellent job of answering my question. So that's where
Awesome.
my
Thank
data
you.
statistics lie, within that one little fair value gap.
I'll say this to the folks that are listening. I've taught a lot of people over the years. I sat one-on-one with people, and I've created a lot of wealthy people doing it that way. And I made a lot of wealthy individuals in the last, I guess, 24 months. The majority of the millionaires that are now out there in the world, talking the lingo that we're talking, a Fight Club, they are incorporating my inversion fair value gap. It really caught fire with a lot of people. It kind of like resonates with a lot of people, and it just gets back to where's the market going to go, and you just need to find a foothold. And if you see where these gaps are, and you can anchor them to opening ranges, key opening times, and the 8:30, 8 o'clock to 8:30, that's an opening range as well because you're going into the news embargo. So all the news is going to start pumping into the marketplace. What's that going to do? It's going to flood the market with liquidity. We're not looking for buying and selling pressure. We're just looking for scalps to take. And I want my scalps. So I want to take an opportunity to get in the marketplace when there's a lot of interest. Orders are going to flood in there. That means I'm going to get the best fills. I'm going to get filled easily. I'm going to get my price. My limit order will fill. It won't run down there and touch the price and not fill. So we can talk about statistics, and statistics are, I've created more millionaires in my educational, foray in the world as a teacher with the idea of the inversion fair value gap and incorporating with runs on liquidity. So it's very strong. It's a breadwinner. It's like once you learn it, you don't need to do anything else. You don't need to worry about all those videos I got on my YouTube channel. That was me creating an encyclopedia for my kids. So that way they know everything. If something happens to dad, this is what I have to say about it. And because I love them, I want to tell them every facet, every detail, what led up to me thinking this way, what created, because they would have questions like, if there's something happened to me and I'm not here, wonder why dad came up with this, or where did he get this idea? What makes him think about that? These are all questions I thought about when I made these videos. I want to be able to, like Michael Keaton's movie, My Life, watch it and you'll understand what I did. Because that's exactly what I did with everything. Like my whole compendium is basically my rendition of that with trading, talking to my kids. But I said a lot about a lot of things. And I guess because, this was like a grand slam home run with a lot of people around the world that had a basic understanding of what it is I teach. When it got in their hands and they started using it, it works. It really works strong. And there's other things that you can learn that's already on my YouTube channel, but it's easier to see the fair value gap. It's a visual, obvious little standout in the charts. It's not hiding from anybody. And because I give you a very specific time window, and the first time it prints, it kind of makes it easy. This is the only one you got to worry about. And if you use that idea, carry it forward and look for the next pool of liquidity for whatever session you're trading in, you don't need the full daily range. You don't need to have the full weekly range. You don't need to have a half of it. All you need is 20 handles, 15 handles, and you can carve out a huge, huge net worth doing that. I have a woman, she's not my best trader, but I have a woman trader. All she aims for is 15 handles in NQ. She wants it 2 or 3 times a week, and she's done. She's made $6.5 million this year, just this year. Now, I don't know about you, but $6.5 million is a good living. Like, I'm sure most of you would not have a hard time living with that. You could afford a lot of things and pretty much nail down a solid outcome to the rest of your life with that. It doesn't mean you're going to live high on the hog the rest of your life, because $1 million doesn't spend well anymore. It's easy to spend that. But $6.5 million, and you're only doing 2 or 3 trades a week, and you're looking for just 15 handles. That's it. It's running a lot more when she's out, but she doesn't care. She knows what she wants. She knows that this is what makes her nervous. If she stays in there longer, she has all these questions about, should I stay? Should I go? Should I stay? Should I go? So she compensated with that by saying, this is what I did. You told me you want to look for 15 handles as a minimum. So I use that. If that's the minimum for you, ICT, that's what I'm aiming for, and that's all I'm going to look for. And she has no aspirations ever increasing. She has no interest. And why would I tell her to do it? Who would be correct or justified in telling her that she needs to tinker with it, that she needs to add more to it? Who else in this audience has made $6.5 million just this year, trading one market 2 or 3 times a week and knowing when she wants to stop? There's about 800 of you in here right now. I guarantee you there ain't no one in here making $6.5 million just trading 2 or 3 times just in the NASDAQ and knowing that's all they want is 15 handles. But that's how little you can do, but look how much it grows. She allows her fixed percentage of equity being applied using simply the cause and effect of money management. As she makes more money, she's not increasing the percentage of risk. That's fixed. So she's allowing the principle of fixed percentage allocation per trade as her equity goes up. She's risking more dollars, but not percentage based on her equity. So her equity risk exposure remains constant. But $6.5 million is $6.5 million, right? You'd want it. I would miss it if I didn't have it. And if someone says, here's an extra $6.5 million, I'm not going to look at it and say, go fuck yourself. I don't want $6.5 million. So she didn't come out this year to aim for $6.5 million, but as her equity went up, she was catching big runs. What happens? She's got more to swing behind each run. And she lets herself go 4 trades, and then she cuts back to her lowest percentage allocation. Whereas I go 5, and I cut back to my lowest and build myself back up. She uses 4 trades. If she's got 4 wins, she cuts back to her lower percentage again. Why? Because she knows she's going to have a losing trade. So she's allowed time and experience to build behind her, and it's like the wind in her sails. And she wants to do the very least and let the power of compound interest do the heavy lifting. Now, I'm not saying that you're all going to do the same thing she's doing, or that any of you will. I can't say that. I can't make that claim. But I can just tell you that these things have worked in so many different people's lives where it connected them with a lifestyle that probably would never happen for them. And they didn't have to pay anything for it. And they hear the same stories that you hear and read all the same things and the complaints and the people making up all kinds of stuff. And she, and like the other ones that made money today, they moved it to the side and said, yeah, it's none of my business. I'm here about me. It's about me. And it's not selfish. It means you're dedicated, you're focused, and you're filtering out the bullshit. So everybody can have a different style and approach to trading. There's so many ways out there we can have profitability. It doesn't have to be an ICT anchored, concept. There are lots of people out there making lots of money. And you need to find out what works for you. You may come to the conclusion that my shit just doesn't work for you. I've had paid students come to me and they said, I just can't make it work. And they went and did other things and they were profitable. It doesn't discount anything that I've ever done or taught. It doesn't discount or remove the profitability of the millionaire students I've had. And you don't see all the millionaires I've created. But I'm thankful that the ones that are doing it publicly are making themselves known. But I've been laughing at everyone that's doubted everything because they assume they know everything when you don't know anything. You have no idea. 2 million people follow me. And it's crazy when you think about how many people are plugging into what you're learning and the shit still works. And I get the same question all the time. Don't you think it's going to become the new retail? No, because it cannibalizes retail concepts. Retail concepts are always going to be there, always going to be there because everybody wants something simple. Give me a ceiling to sell short from, give me a floor to go long on. That's where I'm going to put my stop, that's where I'm going to put my entry. That's easy. That's easy to fleece, and it's always going to be there. That's always going to be the mentality. Everybody wants easy. And easy, well, it's not easy when they try it, is it? They lose, they lose, they lose. But it's easy for us to cannibalize them. And I make no qualms about it. I have no problem. I have no conflict of interest with it because everybody signs the same risk disclosures when they join. When they put their money in the marketplace, they sign the same shit I did. You're probably going to lose money if you don't know what you're doing. Okay. So if they offer their heads on the block, I'm going to chop it off. I'm going to take my pound of flesh. That's the way this works. And you don't have to have any issues with it. If you do, then you can't be a trader. Because if you're making money, someone's losing that. I'm not worrying about the guy that can't feed his kid at nighttime because I took all of his money on his losing trade and I won. I don't look at it that way. I don't internalize it that way. I look at it as I beat the shit out of the marketplace. The marketplace. I don't personify it with someone that's raising children. They're on, fixed income and they just put the last bit of money. I don't do that. I'm not evil. I'm not a monster. So I frame it in a way where I can live with myself. So I look at it as I'm beating the shit out of the marketplace. I'm beating it. It's a game where I have to use intelligence to beat the most intelligent people that are trying to take from me. And if I could have made it easier, I certainly would have. If I could have made it more streamlined, so here's all you got to do, I would have done it. But there's a lot of things you have to learn. There's a lot of things that you have to take in account for yourself and own the responsibilities. Come forward with, these are my character flaws, and I'm going to do what I can to discover what they are. I'm not going to hide them. I'm not going to pretend they don't exist. If you remember, we refer to it as Fight Club around here. And watch the movie again if you didn't watch it recently. What is this? It's a bunch of guys that come together and they're just trying to get through this world. They got their own fucking problems. They all have problems. We all have the same problems. All of us. We're all human. And we come together, we hash it out, we talk about what we did wrong, what we did right, wish we could have did this, I wish we would have learned that sooner. I'm thankful that this happened. We knuckle up, throw a couple haymakers at each other. Look, I don't believe your bullshit would work for me. Well, I don't like them fucking fair value gaps, ICT. You know what I like? I like breakers. I like fucking Fibonacci. I like pitchforks up my ass. Whatever the fuck it is that you guys want to use, if it makes you money, great. I love hearing it. I love hearing about it. I love seeing it, the camaraderie. They say, hey, you know what? We don't have to agree about everything because we're all doing the same fucking thing. We're in Fight Club. We're trying to make fucking money. When we leave, nobody hates each other. Nobody's lifted up on a pedestal. I don't want anybody looking at me like a fucking celebrity. I'm glad that guy Pax came in here. Let me tell you something. The guys that were doing that job, they were my fucking heroes. I wanted to work in the pits with that. I wanted to do that. I wanted to be so good that I could be down there with them because I was convinced that they had the greatest edge, like he was saying. I have students that were on the floor and all this open outcry pits. When guys had to come out of the pits, they struggled because all of that advanced knowledge, they could see all these big conglomerates coming in, pushing orders in. If these whales are coming in and they're buying and buying and buying and buying, that's like getting the fucking inside loop, like Nancy Pelosi and the rest of these assholes in the Senate, where they listen to these hearings about getting things passed so that a company can bring forward an IPO or some kind of bullshit they're going to do. They have inside information. The guys in the pit, they had inside information. They had all the real order flow. Fuck your level 2 bullshit. Fuck all that. They saw the rhythm. They saw how that tape was being played out. They could see who was coming in. And like you said, you can see who's getting squeezed, who's getting pressured right now. I love hearing about that. The students that came to me, I spent many nights talking to them in conversation like we're doing right now. And I wanted to listen to them because I loved it because they had their finger on the pulse of the real market. They were seeing the real thrust of big, huge whales coming in. And all you gotta do is ride their coattails. You didn't have to be the first fucking print. You didn't have to be the first runner in that rally higher or lower. You start seeing these big fucking orders coming in. You these guys are going to put big money in there because they have something invested in. They have an outcome invested. Well, shit, on the floor, small fluctuations all day long. It's your meal ticket. But if you catch a big run and you got whales piling in, what do you think they're going to do? Fade him? They're not going to fade him. They know what the fuck he's going to do. He's going to go in there and start build it up. Like he said, he's not going to try to go against that. That's advantageous. That's not the same thing that level two does today, but that's how they market it. They try to tell you, oh, you don't know what real order flow is, ICT. You ICT traders don't know shit. Dude, before all these things start printing numbers around here, I already know where I want to be in, and I know where it's likely to go. That's what you need to understand. When you learn from me, that's what we're focusing on. A bias, we're bullish or bearish, or we're sitting still. And these fucking asshats, they literally run around here saying, oh, it's a no trade for them. It's a no trade for them. They gambled. They have no idea what the fuck they're doing. They're just trying to be in there every time something moves. I don't want to do that. I want to have all of the edge behind me. I want to know that there's going to be somebody falling victim to that price run. And I need to know why it should take place based on a higher time frame premise. And by having a first presented fair value gap to anchor my idea on, it means I'm eliminating a lot of bullshit. I don't have to worry about, all these moving parts. I don't have to worry about all these different time frames. 1 minute chart, first presented fair value gap. I'm on bullish or bearish. Wonderful. If I'm bullish, if we move down from that first presented fair value gap's formation, guess what I'm going to do? I'm going to look for that fucker to become an inversion fair value gap. I'm going to add every single fucking time it gives me an opportunity inside it. I'm going to build and build and build and build and build. And when that son of a bitch takes off and rips out of there like a SpaceX rocket, I'm smiling. And it reaches to an old high, a relative equal high, closes the opening range gap, goes into the new week opening gap, something that is an easy draw on liquidity. I'm done. I've made more money than most people make in a year in one trade. And I have to move to the sideline and I have to think to myself, now everybody else is going to fight and claw and tear at each other, try to make something. And I'm already done. I'm already done. And I'm thankful that I think that way now. Because when I was younger, as soon as I would get a win, I want to go back in again because I was like, man, this feels so good. I want to have another one. I want to do it again. It feels so good. And that's not winning. That's gambling. That's you chasing the thrill, not you trading a model. And I had wonderful price runs that built up huge runs in equity as a 20-year-old and then shit the bed because I wasn't satisfied with what I just did. I had to do it again. I had to do it again. I got addicted. I got addicted to that moment of astonishment that I could do this in my own hands. And that's what I was asking the gentleman tonight. And I ask every single time I have a millionaire student, I ask them, how do you feel about it and how are you going to manage yourself? Because making $1 million, wonderful, absolutely wonderful. Proud moment. It feels great. But a lot of people don't know how to handle that. $1 million isn't that much money anymore. You can't live the rest of your life on $1 million. In the 80s, it could have helped a lot, but still, the likelihood of you hit the penny pinch, but $1 million could carry for a while. $1 million now, shit. The way they're pushing real estate prices, $1 million doesn't buy you much of a house anymore. So you can't really live on $1 million. How you make this money, and once you acquire it, how it's going to change you, how you're going to think. Is it going to make you feel like you got to do more because $1 million isn't enough for a year? I promise you, if you can get to the point where you're making $250,000 a year, that's a good living. And if anybody tells you otherwise, they're full of shit. I promise you, you will struggle when you start making big money because you're not going to know how to behave. And you need to build a plan before you get there. This is what I'm going to do. I'm going to stick to this much risk only. I'm only going to trade this many times because you will get drunk. You won't be satisfied when you're making a killing. You're going to feel like, well, I felt so easy. Let me just go out there and do it again. No, it's not like a good price run where you can feel confident adding to the position. That's what happens when you get punch drunk, when you start making big payouts. When you get big profits and you're taking money out of your brokerage firm and you're seeing it go into your bank account, that's a wonderful feeling. It's an intoxicating feeling. And you're never going to be able to convey that message the same way you receive it with other people. Other traders are not going to see it like you. Many times, especially on social media, they're going to think that you didn't really do it. You're lying. You're fake. You didn't do it live in front of them on a live stream. You didn't sign in your brokerage firm and enter the order so they can copy you beforehand. All this bullshit. People that are really doing it, if I can get your attention long enough to convince you not to feel obligated to prove everything, then you won't feel these impulsive natures to do more than is necessary when you start making big money. $1 million a year, certainly possible. $500,000 a year, certainly possible. $250,000, easy. $100,000 a year, easy. $50,000 a year, cakewalk. But right now, you just got to be able to be consistent with one micro lot. That's how you got to worry about it right now. And the things that you're going to do with that one micro lot, the same thing you're going to do with one mini contract. And the same thing you're going to do when you build up to 10 minis. And the same thing you're going to do when you build up to 50 contracts and 100 contracts. Same thing. It's the same thing. Nothing changes. The outcome's not necessary. It's not going to undo you. And all of this can be framed on a simple little 3 candlestick formation during a 30-minute window that can't hide from you. I honestly wish I could have every one of my millionaire students that have came forward and joined the ones that are never going to talk to you. They're never going to, they don't care. They don't want to hear the people say, you didn't really do that, you're lying. They don't want to hear it. They don't care. They're not worried about all that stuff. They're living their life. They're doing what they want to do. But I wish that I could have them all together, kind of like an Oprah Winfrey, TV special where we all are together and they can stand up for about a minute or two and say, this is what I was fearful of in the beginning. And this is what I wanted to do. And now I'm doing this, and it was nowhere near what I thought it was going to be like. And it's nothing like I thought it was going to be. I feared things that I didn't have to worry about in the end. And the things I thought were going to be hard weren't that hard. That's the things I want, other students to hear. And when Kit does these types of things, that's what I'm listening for. I'm listening for the moments where people come forward and they say, these are the things I struggled with, and this is how I dealt with it, and this is what I've been able to do right now. That's victory. To me, I see those things as inspirational, and I'm already set. I don't need to do anything the rest of my life. But when I hear that, and I hear the emotion, I hear the healing that some of you went through, and the valleys that some of you guys are in. I know what that's like. And that's just like that movie Fight Club. Everybody came together some way, shape, or form with a fucking problem. They knew that the people that we come around, we get it. We may not be going through it. We maybe didn't go through that yet or suffered as much as they have. But we know that that person's working their ass off, and that's commendable. That person gives a shit about their family, and they're working for it. They're out here trying to carve out their own niche in this, and they're going to find their way, and they're not going to stop. They're not going to give up. And they get encouragement from all of you. And it's respectful. It's admirable. I wish I had this coming up. I needed it, man. I fucking was a wreck. Crying all the time, beating shit up, throwing shit around, hurting fucking people. I had to take it out on whatever event I would do it. And if I was a drinker or a drug user, I probably would have done something worse. But these are very helpful things, and more people should be involved. But the problem is more people involved means a lot more people are going to get their feelings hurt because they didn't get a chance to talk. And I think Kit's learning how to better manage the audience and the participation. And it's certainly better than the first few times I listened to years ago. And it's a work in progress. And none of you should have your feelings hurt because you're all able to talk to me. And Pax gave his stuff. You could reach out to him too. Tweet to me. If you talk shit, I'm going to talk shit back. If you ask me a question, If I don't answer it then, I'll bring it into some video I'm going to do next. Or it's probably already answered and someone's going to come forward and say, he mentioned this here. And if it didn't come from me, don't be offended. I don't respond to everything, not because I think I'm high, snooty and egotistical. It's just if I spoon feed someone, they're going to want it every single time. And all the answers are available to you if you do the work and study. And the ones that are good questions, I'll field them. I'll mention something to kind of like bring light to it. But you don't need to know everything right now. You don't need to do real quick, fill me in with everything right now. No, because that doesn't work. Because as soon as you think you learned something, 50 new questions pop up as soon as you try to look for it in the charts. And then what happens is your inexperience leads to what? Doubt about whether you're going to do it. Oh, this is harder than I thought. This is complicated. No, you're trying to find all the answers real fast. Same thing you did when you were a student in school. You didn't study for the test. You know you got to take the fucking test or you're going to fail. You don't want to fail. You don't want to go home to your parents with a bad grade on your interim report or your report card. So what do? You fuck up and rush and you try to cheat and look over here. What'd you get for question number 4? You chose C? Fuck, I had B. Well, you look like you've been reading and studying. I'll just go with your answer. What the fuck's that? What is that? But that's what you're trying to do. You're trying to jump ahead without putting any work in. And if you care enough to want to make a lot of money doing this, you want the finer things in life, then you're going to put the work in. And nobody gets here that didn't deserve it. And I'll say it again and I'll close. Nobody gets here, finds success, makes real money that didn't deserve it. Nobody falls into it by accident. They work their ass off. So you're not going to be the exception. No one owes you a fucking handout. Nobody owes you a free, whatever the hell those redemption codes are to get a funded account. Get a fucking job. Pay for them. Save up money, put it in a real account. You'll care more about it. You're not. If I bought everybody, a funded account because they asked for it, nobody asking me would be able to do anything with it. Because you know damn well, if you believed that you were able to do it well enough, you would find the money because they ain't that much money. It's inexpensive. It's a fucking pizza night at Papa John's. That's what they cost now. But the people that are asking for it, they would find a way. They would sell something, find a way to get it. And then you would care about nurturing and managing that thing to get a payout. Because that's what all of the profitable students do. I haven't made one millionaire that has anything out of my pocket that I paid for them. I didn't give them money to trade, and I didn't pay for any other prop accounts. They did it all by themselves. And some of them failed beforehand. Not once, not twice. Some of them failed dozens of times, but they didn't stop. They didn't quit. They knew this is what they wanted to do. They didn't give a shit what anybody else said about it because they kept their nose down in the charts and didn't talk about what they were failing on right now. They kept it in Fight Club. They kept it private. Here, when you guys talk amongst each other, everybody here respects the next guy. You may not agree with what the hell they're talking about. It's fine. But you understand that they're here because they care and they're working for it. And I love that. I love this, man. I love seeing it. I love seeing the participation in it. And I love the encouragement each one of you guys give to one another and the respect that you show one another. In this world right now, it's shitty. Everybody's talking shit about everybody. They want to take from somebody. Nobody's taking anything from anybody here except for encouragement. Nobody's shitting on anybody here. Nobody's talking down to anybody here. It's therapy. It's group therapy. It's group self-talk. It's a recalibration. And for me, I think it's fucking beautiful. Enjoy your weekend, guys.
Trader Roundup, it's Friday. Thank you, ICT. See you guys around.
You were the algo, code the algo. Just keep going.